stocks and new SCV platform iShares Pro X, and also the Hunter 350 have crossed 5 lakh sales mark, and a market share of heavy duty truck is at around 8.9%, and they continue to expand middleweight segment for Royal Enfield, and they believe that they can outgrow the motorcycle segment growth in the long term. And also the discounts level should continue to drop in the CVs as per the management. So these are the basic con call highlights for iShares. Next on my list is Escorts Kubota, wherein if you see the key highlights for the company, overall, though there was a revenue growth of almost 9%, EBITDA growth was only 4%. Margins have taken a hit at 11.4% versus 12% last year, and the net profit is up. Now, if I were to talk about the key highlights for this, their agri machinery segment, the tractor volumes increased 4.5% year on year, but the EBIT margin over here declined to 10.4% from 12% a year ago, and that's the reason we are seeing the decline in margin. While construction equipment segment saw 0.9% year-on-year sales volume, and EBIT margin improved there to 11% from 8% last year. The railway equipment segment, where they have sold this segment, though their revenue declined 2.2% and PAT increased to 32 crore versus 28 crore last year.
Okay, thanks so much for that, Varsha. Interesting, both of those counters, of course, buzzing. Let's pull those up. Let's see how they're doing in trade. Well, clearly not doing well. Escorts 4.5%+ lower. iShares Motors 6% now. So the pain absolutely clear and evident on your screen from some of those. But from all that's been going wrong, again shifting back to possibly what's going decently okay. There's going to be an MSCI rejig later today. Reaction likely only tomorrow, and news also will break likely only tomorrow. But it'll be first thing tomorrow, so we'll try and break that down for you. What can we expect? One is we'll have the announcement come in post-market today or maybe late night today. The adjustment, though, will only happen on the 28th of February. Some names you want to keep your eye out on, and those will be critical, especially in the larger index. You'll have something like a Hyundai India. There you go, 13 times flow versus average volume. So that's one stock you may really want to keep on your radar. This could well be a fresh addition into the MSCI index. And if that were to happen, you might see good flows. These are some weight ups. So you'll have an IndusInd, a Varun Beverages, a Torrent, a Mankind, an Aurobindo. Anything between 2 to 5 times average daily volume to flows is the kind of flow you'll see in some of these. Mind you, the rejig is effective 28th October, so 28th of February, I apologize. And so you'll still have a sizable amount of time for these flows to come through, but some of them quite material in that sense. You'll also have some bit of outflow because of the likely deletion of Adani Green Energy, and then you'll also have certain weight downs which will happen, and that's in Asian Paints as well as REC. You might see some outflows there. Average volume in front of you, average daily volume. Last off, within the mid and the small cap indices, expected to be 23 additions. Some of the bigger ones are Adani Wilmar, Afcons, Brainbees, Ola, and among the small cap index as well, you'll likely see a couple of deletions. There you go, Lao Pala, DB Corp, Mahindra Logistics. Some of those will be material. The other stock, and frankly, a very strong set of numbers, and shifting focus from from the MSCI to the aluminium space, and Nalco, the company reported very good numbers in Q3. Frankly, impressive set, multifold jump in profit, margin expansion, very solid. We spoke with the management on the quarter gone by, and of course outlook as well. Listen into what he had to say.
As far as Q4 is concerned, Q4, almost whatever alumina export we are doing in Q4, the bookings which were done earlier, the prices are almost same as Q3. But in the subsequent quarter, after Q4, that is next financial year, first quarter, the prices will come down, which is now spot booking going on around $530. So that effect will come in the subsequent quarter. But this quarter, a slight reduction will be there, but not major impact. For 25, maybe we will be ending up revenues with around 15,000 crores of maybe total overall our revenues will be there, maybe slightly plus minus. And EBITDA margin maybe 35 to 40% EBITDA margin will be of trying to end up the year with.
And sticking with earnings, spotlight on GSFC as well today. Decent set. We spoke with SK Bajpai about their growth outlook for Q4. Stock down 5%. Listen into a slice of that.
The rain is very good, but if we see that the Q4 is the lean season for the fertilizer industry, and we have also taken the opportunity to plant shutdown of all our fertilizer plants. So Q4 will not be that great as the 9 months of the current financial year. But we hope we are placing our stocks at the field, and we will be relieving our stock positions. And let us see what happens in the Q4.
That's on GSFC. But US President Donald Trump, in an executive order signed on Monday, paused enforcement of a federal law, Foreign Corrupt Practices Act, the FCPA. Somit joins us to tell us more about this. Somit.
Well, if you see, the US President Donald Trump has signed an executive order directing the Department of Justice to pause enforcing FCPA. Now, FCPA is the Foreign Corrupt Practice Act, which became a law in 1977, barring all Americans and certain foreign issuers of securities from paying bribes to foreign officials. Now, this law was amended in 1998 to also apply to foreign firms and people who cause such bribes to take place within the United States as well. Now, as per the US President, this move is going to mean a lot more business for America going forward, and he also said that this act sounds good on paper, but in practice it's a disaster. The US companies are harmed by FCPA over enforcement because they are prohibited from engaging in practices which are quite common by international competitors, and this not enforcing this act will make an even playing field for US companies in foreign field also, as per the president. Now, last year, the US Department of Justice had also accused Adani officials of perpetrating a bribery scheme. Now, Adani Group had called these accusations baseless as they were not charged under FCPA. But now, given the fact that the US President has paused enforcing this act, it will mean that the earlier Biden regime or Biden administration who had charged Adani Group officials with the bribery act will not be applicable, given the fact that now the current president has put a pause on this FCPA, which is the Foreign Corrupt Practice Act.
Thank you so much for getting us the details. So clearly you have Trump who's gone ahead and signed the order pausing enforcement of foreign bribery ban. In fact, as we know, President Donald Trump has also signed an executive order directing the Department of Justice to pause enforcing a nearly half-century-old law that actually prohibits American companies and foreign firms from bribing officials of foreign governments to obtain or retain business. The pause is being implemented to avoid putting US businesses at an economic disadvantage to foreign competitors. In fact, Trump is directing Attorney General Pam Bondi to prepare new guidelines for Foreign Corrupt Practice Act enforcement. To discuss more on this, joining us on our show is Sunil Subramaniam, market veteran, and Gopal Jain, senior advocate at the Supreme Court. Welcome to the show, gentlemen. Mr. Jain, let me come to you first. This was something which was probably anticipated. Would you say that correct? I mean, would you agree to that? How would you read this, disaster act that has been removed by Trump?
Well, maybe he played his trump card. Yes, I think sweeping changes were expected as far as the new administration was concerned, and this seems to be one. And two, his whole mantra seems to be how to help American companies be more competitive, and America first policy. So perhaps that's what weighed with him in furtherance of the goal that he had set during the campaign and otherwise, that this places them at a global disadvantage. And so it's perhaps beneficial to make them more competitive and remove this act, or at least put a pause button for the moment.
Clearly, the kind of impact that Indian companies could have seen on the back of this is what we need to look at, because we did have the Adani group of companies which bear the brunt of something like this, right? Mr. Subramaniam, let me come to you. How would you read this in context to the markets? FCPA suspension and impact on the Adani case outcomes, because clearly the kind of downtick or the correction that we saw in terms of stock prices, which was not warranted, which was not really driven by what happened in terms of the act of the companies, but it was mainly to do with Biden's, clearly the order that they had passed, right? What would you have to say?
I would say that this clearly indicates that for Trump, more than being the president of the United States, he is acting like the chief business officer of the United States, right? So obviously in every decision, even if you look at it from the Trump tariff perspective, he's used the tariff to extract concessions for American businesses to make America great again, American businesses great again. So this is another step there. And I think what this augurs will see, the US through this act was trying to behave like a moral god, that anywhere in the world a US company does anything corrupt, then they will be hauled up in the US. So I think obviously when they're competing with Japanese companies, Korean companies, European companies in the emerging market space, there are practices like this which are very often done. So I think that this gives a level playing field to American businesses. And I think the timing of it before Mr. Modi goes there is critical because, obviously he's seeking to promote American businesses in India. And locally, there are adjustments to be made. Now, obviously, this clears the path for more American businesses to operate in international economies and including in India. So I think the relevance in terms of timing is also very important. Then second, that it's also very clear that Trump is not going around doing soft power, right? He's not pussyfooting around it. He's there. He says, I will suspend this law. He's willing to use his executive powers to do that. So it clearly shows that he's a man of action. Now, some may like it, some may not like it. But at least you get the clarity that he's very firm on what he believes. He'll go and practice. So in that sense, he's a WYSIWYG. What you see is what you get. So to that extent, for the markets, right, this has been a big boost because every American company operating in India, they would always be thinking, no, somewhere some of their partners, right, they engage with subcontractors. Some subcontractor pays a bribe somewhere, that company will be hauled. Was an overhang which was probably a deterrent to American businesses going and competing in international spaces, including in India, and this will free up that. And I think the Modi-Trump discussions in terms of, obviously there's going to be give and take, that America is going to try sell military energy to India, and India is obviously going to try to enhance and avoid a very severe tariff. So I think this sets the base well. The markets should welcome this kind of a clarity. And specifically, I cannot comment on the Adani stocks itself specifically, but obviously any companies in India, which thanks to their linkages, either by raising securities in the US market or dealing in partnership with US companies, was under the purview of this law, will get a relief in the sense that such things will no longer be overhang on them from a business practice perspective.
Because, you mentioned about the Adani group of companies as well. And since this time and since the announcement has come in, you are seeing that positive reaction come in on the counters as well. Adani Enterprises, which saw strong moves, Power, Green Energy, Total, AC, you name the companies, all of them trading in the positive in today's session. So clearly, the question is about how big an overhang was this. Mr. Jain, let me come to you, taking this point from Mr. Subramaniam into consideration, that acts like these do become an overhang for the Adani group of companies as well, which now seems they are taken over. But now you're talking about, Pam Bondi, who will be probably issuing revised FCPA enforcement guidelines. Taking this entire scenario into consideration, how are you reading it in terms of the revision that will come through? You plus have the Modi government meet President Trump as well soon. So do you think all of this will be weaved in?
Yes, I think it's like a big package. Everything will get weaved in. And I think the key focus obviously seems to be to give a fillip to American businesses and remove this overhang which has been there. So it's sent a positive sentiment. And I think in line with the new ethos and thinking, the revised guidelines will reflect that. So I think it will be a significant change from the existing framework and structure to the proposed new framework, structure, or guidelines that they will come up with. And I think, like we say in India, perhaps this is another facet of ease of business is what they have. And it will probably generate a lot more business in America. And two, the timing of the meeting of the two leaders is important. It will give them a chance to discuss a lot more without some of the thorny or tricky or prickly issues bothering them. So I think it also, in that sense, paves the way for much more constructive dialogue on the way forward for the two countries.
Right. And Mr. Chen, do you think this will overall, remove this overhang on the Adani group of companies as well on an end-to-end basis?
I think so. If the whole idea is to pause, reset, and restart, I think it will have a significant bearing on this. But like I said, it's the announcement at the moment, and we have to just wait for the shape of the new framework or guidelines that they come up with. But yes, it's definitely a positive start in that sense.
And yes, go on.
Sorry. No, I was going to say, for example, in India also in the last few years, we've streamlined several old acts, phased them out, come up with new enactments and laws. So perhaps even globally, people are recalibrating their business interests and therefore laws and policies which will be supportive rather than be an overhang.
Okay. Mr. Subramaniam, clearly, you did speak about how the market should be reading this. But in future, anything of an announcement that comes like this from a foreign country, how should the Indian markets read that? Because clearly, you're seeing investors who were misguided at a lot of levels, right? And at that point in time, the stocks of those companies did collapse, because of which retailers did lose on a lot of wealth, which is not in favor. So how would you advise retail investors to then read news items like this?
So I would say that, this is a lot of noise. A true value of a company should be based on its business, its EPS growth, its market share growth, its competitive advantages. That's what the share market is meant for. Such announcements and this which come from external sources and cost corrections in them, right? I would say that for retail investors, when you get into individual stocks, it's very hard to assess these, right? Whereas you hand your money over to an experienced fund manager through either the mutual fund or through portfolio management services, they will be able to look at this in the light of the fact that there is this concern. It has created a correction in the stock price, but if the core business of that company is not getting affected, maybe this correction is a time to buy. So a smart fund manager with expertise there could take actually advantage of this volatility, but a retail investor probably getting shocked would try to then sell it in the time of panic and would end up losing a lot of money. So I think the story then lies that such news which comes and affects prices don't affect the fundamental value of the company in terms of their future growth prospects. And to assess that correctly, always rely on experienced fund managers rather than going in yourself dabbling into these stocks, on such times. So my advice to them is leave that to the experts and to the people to manage it. These actions which come from an external sources are very hard for a retail investor to understand and manage. And everybody goes by the fear and greed. There's an emotional aspect to investing. And that at the time of fear, they will tend to sell it at a suboptimal price and a suboptimal time.
Well summed up, Mr. Subramaniam. Mr. Jain, clearly the DOJ in 2024 actually had announced enforcement actions in 24 cases related to alleged violation of the FCPA. And there were some 17 such actions announced in 2023 as well. Taking this quantum into consideration, do you think a lot of these cases will be nullified with the Trump government? Because clearly you are seeing a lot of concerns with the old regime.
I think the right word may be revisit or rethink on it, because you put a pause to the present enforcement guidelines, you're looking at new ones. So certainly it will give them that opportunity to rethink, re-examine, revisit this in the light of the new proposed changes that they seek to put in. So it's like a transition. You're moving from the present regime to a potentially different regime in future. So they will definitely perhaps rethink the existing cases that you mentioned.
So I think a lot of things that need to be done on this end as well. Rethink, revisit, and a pause at the current level is what President Trump has spoken about. And as Mr. Subramaniam also mentioned, clearly it's the retail investors who do get stuck in this kind of noise. So it's very crucial in terms of the action that lies and what you listen to and how you place your investments overall. But thank you, Mr. Subramaniam. Thank you, Mr. Jain, so much for joining us on the show and sharing the views. So clearly, just to sum it up all in terms of the order. Trump has gone ahead and signed an order pausing the enforcement of foreign bribery ban. It's an executive order directing the Department of Justice to pause enforcing a nearly half-century-old law that prohibits American companies and foreign firms from bribing officials of the foreign governments to obtain or retain business. And now Trump is directing Attorney General Pam Bondi to prepare new guidelines for Foreign Corrupt Practices Act enforcement. So clearly, on the back of which you have the Adani group of companies which have seen a surge following Trump's order, because clearly a lot of noise that has been in the making in the past. That's all that we have on this session. Stay tuned to NDTV Profit for lots more on the other side.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Well, hello and welcome to Profit Puzzles. My name is Rucha Sumaya. Let's have a quick, and with me is Hiral. Let's have a quick look at how the markets are faring. Well, another bad day for the markets clearly. Let's look at the Nifty 50 index. Well, this one is down in the red since the start of the trade, down about 0.6%. Sensex is also down at the same levels. Nifty IT, banking index, all down by 0.7 to 8%. Let's also have a quick look at the advanced decline ratios. Well, advanced decline ratio, if we can have a look over here, definitely in the favor of declines. There are 13 declines is to 1 advances. Let's also have a look at the sectoral heat map if we can. All the sectors in the red, Nifty Realty and Media losing the most, while those which are actually losing the least is Nifty IT and Nifty Metals, but none of the sectors in the green. Let's have a quick look at the constituents of the Nifty 50 index. The top losing one is Eicher Motors and Apollo Hospitals, down about 6% in trade, both after its third quarter earnings. We also have HDFC Bank, Kotak Mahindra and ICICI, all the banking names down in the red. But with that, let's also have a quick look at the constituents of the banking index. All the constituents in the red except for Axis Bank, which is just marginally in the green, but the ones which are losing the most are Canara Bank, Federal Bank and PNB, which are down about 0.5 to 1%. Let's look at the Nifty IT index as well. IT is also down in the red except for Infosys, largely in the green, and HCL Technology largely trading flat, but largely the most losing names are the mid-cap ones. L&T Technologies, Wipro, Coforge and Persistence, largely the mid-cap names. Remember that these are the ones which lose the most and gain the most in terms of volatile markets. But Hiral, tell us, how are the broader markets faring like?
It's interesting to see what's happening with the broader markets, Rucha, because not only today, if you see the past data as well, clearly you've seen the mid cap and the small cap index, which is down almost 14 to 17% from their recent highs, right? And today, we're trading at the day's lowest level. So we're just around 4 to 5% away from the bear market. In fact, interestingly, if you see in terms of the valuation trend as well, currently, we're trading at around, in terms of the BSE mid-cap index, is around 31, 32 times. And this is the same level where the index was trading in terms of the 2014 highs, right? So the valuation gap is also there. They look expensive, but a major sell-off coming in terms of broader markets. And interestingly, you have the FIIs which are holding a higher position in terms of the mid caps and the small caps versus their position in terms of the large caps. The sell-off in the large caps is FI driven. We're trying to figure out the data in terms of how the DIIs are acting to it as well. But let's quickly look at a few of the other counters which are losing out. KFin Tech, a 10% cut coming on that one. Zenzar Tech seeing cuts in today's session. Elecon is trading under pressure as well. Apart from that, you have a HBL Engineering. That stock is down almost 11 to 12% in today's day of trade. What's actually on the gaining side, Juniper is seeing gains of around 4.5%. MSTC is up and traded again. This is on the back of numbers. An interesting number that was reported by MSTC. Adani Group of companies, Adani Enterprises is seeing some strong moves, and this is on the back of the FCPA Act that has been paused. LIC, again, another one. Star Cement is also seeing some smart moves. So interesting names. A lot of stock-specific action is what we are seeing in terms of today's session. But there is pressure. There is a sell-off that we are seeing in terms of the broader markets. How much further pain is going to be there from here on is what we need to wait and watch and see, because the sell-off versus the valuations versus the FI and DII position in terms of these names is that link that needs to be decoded from here on. But on to the same stocks that are reacting on the back of Q3 numbers, we have Mahima also, who's joining us to give us details on two names, Nykaa as well as Grasim. Let's pull up both these counters on the screens and see what's happening with Nykaa and Grasim. Nykaa is down 2%, Grasim is seeing gains of nearly 1% in trade. Mahima, clearly, both of these stocks, if you see, opposite reaction is what we are seeing. What are you picking up? What's working and what's not working for either of them?
Right, so in terms of Grasim, if you check the consolidated YOY numbers, revenue was up 27%, but EBITDA was down 48%. Margins have taken a significant hit, and net loss extended to around 169 crores versus a profit of 236 crores. In terms of the key highlights with respect to segments, the cellulose fiber did well, revenue growth of 6%, EBITDA, however, degrew by 18%, but China operating rates improved to around 89%. Chemicals revenue was up 12%, and the EBITDA also increased by 25%. So this is the segment that is kind of bought in the revenue growth. Caustic soda international average spot prices stood higher at 16% YOY. In terms of building materials, revenue growth was at 10%, but EBITDA degrew by around 14%. Birla Opus, the commentary coming in from management is that out of total 6 plants which were planned, 4 are already operational. The total capex so far as of December 2024 stand at 9,015 crore, and this is 90% of the total capex planned. In terms of financial services, overall lending portfolio was up by 27%, and total AUM grew by 23%. Other businesses, which includes the textiles, renewables and insulators, EBITDA remained impacted by exceptional high input prices in the linen segment, but the overall renewable business capacity, cumulative capacity, was up by 37%. In terms of Nykaa, the company posted good set of Q3 earnings. Revenue was up 27%, EBITDA was up 41%, EBITDA margins at 6.2% versus that of 5.56%. So a slight uptick of 63 basis points there, and net profit was up by 52%. In terms of key highlights, why the stock did see in fact an uptick in trade today. However, it's cooled off right now, but the consolidated gross merchandise value grew by 25%. Beauty segment was up 32%. Beauty vertical volume growth was at 30%, which is where the major revenue growth has come in. Nykaa Fashion also witnessed a revenue growth of 21%. Nykaa Land has done well for the company, as well as the management has said that they are not worried about the competition that is coming in from other players. So this is the overall view as to how Q3 panned out for both of these companies.
Okay, well, thank you so much for that. Let's move on to talking about Signature Global. Well, this one came out with its third quarter numbers post-market yesterday. In terms of key highlights, it achieved 84% pre-sales guidance, and it also expects to achieve around 47% of collections in the fourth quarter. Realizations also continue on an upward trajectory at about 12,565 per square feet. But looking at the counter, this one is down about 3.5% in trade. But to talk to us more about this one, we are being joined by the CEO, Mr. Rajat Kathuria from Signature Global. Well, thank you so much for joining us and welcome on the show, sir. My first question to you will be about the growth and the guidance. What would be the key levers going ahead, especially in FY26, which will aid achieving this kind of guidance?
So, thanks a lot for inviting us to your show. So, see, during this year, our strategy was, similar to the past, but very simple that, if we are creating supply around mid-income housing products, it is kind of taking a good, it's seeing a good offtake. So during this 9-month period, we launched multiple projects in our micro markets in and around Gurgaon, whether it be on the Southern Peripheral Road or on the Sona corridor or on the Manesar side. We've launched few projects, and all of them have seen, good uptake in the market. That's what's led to, us achieving almost close to 9,000 crores in terms of pre-sales during this 9-month period. It was 8,700 crores to be precise. And if you look at the entire calendar year 2024, the pre-sales numbers crossed 12,000. Rather, they were close to 12,800 odd crores. So our strategy is simple to kind of, focus on mid-income housing, keep coming up with new supply, and at the rightful price points to achieve growth.
Hi, Mr. Kathuria. This is Anushi joining in the conversation. Firstly, I want to ask about the pre-sales number. It's been on a strong trajectory for FY25. 87% is what we've achieved. Is there an upward revision that we are looking in terms of where the pre-sales is concerned? And also, if you're talking about the collections, now we need to achieve the 6,000 mark. Currently, we need to achieve about 47% of guidance in the fourth quarter as well. So, would there be some acceleration? What is the picture building up for collections as is pre-sales?
See, there is definite acceleration on the collection side. So we do expect to do much better collections than what we've done in the previous quarters. We've kept the guidance constant as of today because there's still room for this quarter collections to happen and to improve. At the same time, pre-sales, we are confident that we will cross the 10,000 mark, but we've also kept the guidance constant as of now on that front as well.
So constant guidance is what we are looking for. Now, in terms of where the revenue recognition is concerned, we've achieved 2/3 of revenue guidance for FY25 in the 9-month period as what we are seeing. Now, for FY26, there is an expectation of acceleration in terms of where the revenue recognition is also concerned. So I want to understand that since you follow a project completion method as per our previous conversation also that we've had, what is the margin picture also going to be like along with the revenue growth that can be expected in the coming 1 to 2 years? Is there going to be an improvement in terms of margins as well? Because there is also focus on mid-income, as you said, that's the core strategy, but some premium projects also adding to the mix.
Right, Anushi. So see, if you look at our current sales picture and the profitability around it, so effectively we are targeting to cross 10,000 crores in terms of pre-sales this year. And the implied EBITDA margin on this entire business is close to 35%. We are confident about that profitability number because, the land is kind of locked in. It's mostly owned by us and hence, we are aware of the price points at which it's selling. So, costs could vary, but, by and large, we'll be able to achieve the EBITDA margin on this, sales, which is currently happening at this point in time. What we are seeing in terms of revenue recognition, you're right that we have to follow, completed contract method of accounting, which effectively means that if construction has a cycle of, let's say, 3 to 4 years in terms of project completion, what you're seeing in the profit and loss account today is the size and scale of the company which existed about 3 to 4 years ago. For a company which has seen massive growth over this, period, post-COVID sort of period, there's a huge difference in terms of, what is currently being achieved and what is kind of getting reflected in the P&L account as of today. But over the years to come, there'll be convergence on both the points. The current profitability is close to 35%. The earlier margins are, at a gross margin, we've achieved around 27-28% during these 9-month period, but our entire SG&A, which is kind of going into the profit and loss account, is for the current scale of operations. And that's kind of, taking our EBITDA down to around 11 to 12%. But you'll see like a sustained growth, in the margin picture in the coming quarters and years.
Okay, so a sustained growth is what we are looking for, margins coming forward for the quarters. But also let's talk about some of the key launches. Want to get your clarity on Q4. What are some of the key launches that could be expected? And even going forward in say 26, 27, now you have inventory worth of about 50,000 crore with a GDP potential of around 50,000 crore. When can we see some of these launches taking place? If you can give us an idea on these ongoing and forthcoming launches that you have planned for the next 2 fiscals.
So, Anushri, we've identified 3 key spots in the Gurgaon market which we feel are very well accepted by the market for mid-income stroke premium housing products, which is, let's say, on the southern peripheral road, which is like an extension to the golf course extension road. or on the Dwarka Expressway, which kind of got completed last year and has seen some tremendous infrastructure developments happening in that area, or the Sona Elevated Corridor, which is the starting point for the Delhi-Mumbai Industrial corridor or highway as well. So in all these three markets, we've done launches in this calendar year, which has gone by. And even in the coming year, we are coming up with more launches because, we have a fairly good land resource and we can, come up with launches on a continuous basis. So for instance, in Sector 71, we are going to do a phase 2 of a project which we launched in June 2024 by the name of Titanium. And even in Sector 37D of Gurgaon, we usually brand it around the word DXP. So, we are coming up with 2 new projects in that market as well. So our tried and tested market, you will see more product launches.
And are there any concerns about delays in some of the launches? Now, if you just take a look across some of the real estate players, now they've cited some approval related challenges which have led to a delay in the launches that have been there. Could there be a possibility this happening in the sector in which you operate as well, which is mainly in the Gurugram side of the region? Want to get a perspective on that, as well as the realizations from your own. You're already touching realizations at the mark of 12,500 or so. So do you expect a further upside from these levels, or are they expected to stabilize with the current levels which are there?
So we are not seeing any approval-related snags. So we are not seeing that as a risk at this point in time. The project pipeline, which we are targeting to launch over this calendar year, now, we are quite advanced in terms of those approvals. So we don't see that as a, something which is very concerning to us at this stage. As far as the price points are concerned, on a portfolio level, we've seen about an 8% plus rise during these 9 months. In comparison to the 12 months, which is gone by, which is fiscal year 24. Going forward, we do foresee like a single-digit rise in terms of price points because demand is still kind of, outpacing supply, and we expect the prices to go up in a more moderate manner going forward.
Okay, fair point, Mr. Kathuria. My final question to you is about the rate cut which took place in just a few days ago. That was the 25 basis points. Want to understand, considering that you have the mid-income and the affordable side, what is this quantum of benefit that is in it for you, and are there expectations of further such cuts also aiding your business going forward?
So, see, both the, couple of macro factors were very positive for us, whether it was the reduction in income tax, during the budget 2025, or it was the, rate cut by the central bank. So both of these factors are beneficial for the urban consumer who are, our customers as well. So both of these factors will have like a, positive impact on the business.
Okay, well, thank you so much for that, Mr. Kathuria. That's the time that we have for the conversation. Thank you, Anushi, for joining us as well. It's always a pleasure to speak with you, Rajat. Thank you so much for joining. Well, moving on with the show, in a significant development, 6 US congressmen on Monday wrote to the new Attorney General Pam Bondi and demanded a probe into the previous Department of Justice, that is DOJ, indictment of Adani Group officials. We have Hiral who's on standby to offer more perspective on this one. Hiral, over to you.
Thank you. Clearly, and this is in a strongly worded letter to Attorney General Pam Bondi, the 6 US lawmakers, that's Lance Goodin, Pat Fallon, Mike, Brandon Gill, William Timmons and Brian Babin. They've said that the previous DOJ's action was a misguided crusade that came at the risk of harming America's relationship with a strategic geopolitical partner like India. Now, last year, we know that the Adani Group had rejected as baseless the move by the Department of Justice under the Biden administration to name the conglomerate in a case of alleged wrongdoing. Now, what they have said is that there has been no compelling reason to pursue DOJ indictment against the Adani Group, and this is in a manner that could complicate relations with an ally like India unless some external factors were at play, is what they said. Moving on, they said that the questionable pursuit of an case against the Adani Group is an unwise decision by the Biden administration. Moving on, politically motivated decisions by agencies steered by the left-wing megadonors could quickly erode years of hard work and diplomacy. The other point is that the selective pursuit by Biden's DOJ needs a second look, and that's a strong statement to come in as well. What they've indicated is that despite knowing the possible outcomes of such a reckless decision, it requires a second look 100%. Moving on, investigate Biden DOJ's conduct and share all the records pertaining to this case is what the congressmen have asked. They've also said that the real reasons behind decision to indict Adani's could uncover whether Biden administration was compromised to outside entities. And the needless pursuit against those who have contributed tens of billions and created thousands of jobs will deter investors. What this means is that clearly, considering these factors and the lack of any real injury to US interest, the decision to pursue this indictment demonstrates more harm for America's interest than good, if any. In addition, what they've said is that Biden DOJ indictment indicted companies' executives without any real injury to US interests. Biden DOJ should have referred the case to Indian authorities, is what all the 6 of them have said in the letter that they've written to AG Pamela Bondi. Apart from that, the decision has actually gone ahead and jeopardized relationships with close allies like India, and they should have referred the case to Indian authorities. Addition to this, they've indicated that India is an important ally to the US for decades, and especially against the growing threat from China. US relationship with India is rare and has no congruent. If there is any fallout in relations with India, it could actually benefit adversaries like China, is what they have indicated. And the end culture of lawfare, opacity and privatization of DOJ as the law firm of the left is the comment that has come in from the US congressmen. Very lastly, they've said that they'd written to previously AG on the 7th of January and the 14th of January, but they did not receive any response. And they request them to investigate Biden DOJ's conduct and would appreciate them sharing with them all records which are pertaining to this case for a coordinated effort in uncovering the truth. So clearly, a call to investigate Biden's Department of Justice, the letter by US congressmen that has gone to them and has actually slammed Team Biden.
Okay, well, very detailed analysis over there. But with that, let's have a quick look at the markets and how they are faring. Well, not much change as we could see. Since the start of the day, this one has been in the red. Nifty 50 down about 0.8% is what we can see over here. Largely towards the day's low is what we can see. But there are a few stocks which I definitely want to highlight. The 9 stocks which NDTV comes out with. 5 of them are a thumbs up. MTA Technologies, third quarter profits up about 50%. Let's see how the stock is faring in trade, but still in a downfall of the market, this one is trading about 1.4% down in the red. We have Nykaa again, strong third quarter results, but as Mahima mentioned, this one is also down in trade about 2%. Yatra also posted its revenue numbers over doubled in the third quarter. Let's see how this one again down about 2.3%. So much, even if the stocks are posing good results, the stock is being beaten down because of the weak global cues and FY selling pressure. There are so many reasons wherein the market is tumbling down today. Grasim also, where its operating profit actually halved, but this one is doing good in trade is what we could see. Oh, that's very strange. So this market is clearly unpredictable. Good numbers are making the stock come down, and bad numbers is actually making the stock go up. But nevertheless, let's move on to Eicher Motors. This one is also pulled its third quarter numbers very clearly. Bad kind of result is what we could see over now. The stock is tanking about down 6% in trade. While you still with us, Varsha, if you can hear me, please go ahead and let us know what is Eicher Moting indicating about its third quarter results.
Yes, thank you for that. So clearly the company is under pressure. Now the renewed focus on growth has actually hurt the margins for the business, or I would say the profitability slightly. Adverse product mix and higher marketing spends have led to Q3 miss through, though domestic sales for Royal Enfield expanded 13% year on year against a 2% decline in the industry. The management had indicated that it would continue investing in demand generation activities, including brand building efforts to drive future growth. So clearly the change in product mix and of course the marketing spend has led to EBITDA miss slightly.
Companies or refiners like yours, it's a grand event for all the energy companies to come and showcase their capabilities, what they are doing, what they intend to do, and what are the competencies which they have. And this is an area where we can build global partnerships. There are people who are coming from different companies. It's not only the energy players, there are technology players, there are other stakeholders who are well represented over here, and definitely when you work along with them, you can achieve much more than what you intend to.
Right. Sir, this is coming at a time, if you look at the context, when the US is talking about America first, there's US sanctions on crude and everything. How do you think for companies like us who are now like 30-40% importing from Russia going to affect this and also the kind of deliberations that you are having here? Even I think you are talking to Russian delegates. So what exactly is the roadmap ahead for a company like yours?
See, there is enough of crude available. There is no dearth of crude. Even earlier when the Russian crude discounts were not there, the India was processing crude. We were getting crude from Western Asia and various other places. So as it is, there is no dearth of availability of crude. Even now, when the US has not sanctioned the entire Russian crude, they have put only certain entities and the companies in sanctions. Yes, within the sanctions, whatever crude is available, that is definitely will be bought and the remittances would be paid. So that is not an issue. And the crude diet which HPCL has, we have a wide variety of crude availability from various countries and different crudes which will be processed. So as such, there is no problem as regards crude processing is concerned for us.
Right. Sir, HPCL in the context like, Prime Minister is visiting US tomorrow. And even the minister was saying that, Hardeep Singh Puri, that major Indian companies are now talking for LNG imports also from US. So are you all also in discussion for some contracts and also for crude from US?
See, you are aware that we have recently commissioned our HP LNG, that is a LNG regasification facility in the state of Gujarat, that is Chara. Now, having set up the facility, now we are already into the market for getting into a long-term supply source for our future requirements. So in that regard, we are exploring various options, including whether availability of gas from US or any other country. And definitely, if an opportunity comes, we'll look for and tie it up with them.
And recently, I think you.
Okay, well, it's time for a short break on the show, but that's lots more on the other side. Do stay tuned.
entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Welcome back to NDTV Profit. You're watching Profit Buzzer. Well, on to an NDTV Profit exclusive at the sidelines of the Aero India 2025 event. My colleague Sajid Mangat caught up key players from the defense sector and about the sector's trends, challenges, and upcoming opportunities as well. Listen to a slice of the conversation.
We know for the fact that you've been involved in space engines for more than 3 decades now. And now you're venturing into the biggest question that everyone is asking in the aero engines for Indian aircraft. Where are we on that? And you've been working on it for last couple of years since the last Aero India show when you got the first order. Can you take us to the journey that we have been
Sure. So for Godrej, our passion is engines. As you rightly say, we started manufacturing for ISRO way back in 1985. And since then, we have been working with ISRO for various engines. And India does need the next generation gas turbine engine. And we won this order from DRDO GTRE about 2 years back. And since then, we have been manufacturing and developing this particular engine. We have shipped one set of an engine to GTRE. And what you see over here is the second set which is being displayed over there. So we are on an advanced stage. A lot of work from manufacturing of toolings to understanding the process, metallurgy, welding, with the ovality of all the various casing, etc. So a lot of learning they have come through, and I think we are well ready to deliver further engines to the Indian programs.
One of the things which has been in discussion here is about the delay in Tejas. I know you don't do much for Tejas except for some of the actuators which are used here, right?
Yeah, for Tejas we have developed along with ADA the flight control actuators. The LESA and the ABC are now flying, And what you see over is the L1 actuator. So this will be under test very soon. Also, we have developed various lubrication pumps. The nose wheel steering is our own design. So this is a part of the landing gear where after the aircraft lands, it kind of maneuvers onto the tarmac and takes it to the parking. So that's the nose wheel steering. That's our own design. So we have ventured into the build to spec. Earlier, up to 2021-22, we were a build to print company. With this, we have ventured into the build to spec. We are also working on ejector release units again for various programs. The uplocks which take care of the landing gear when the lock in ought to be released. So various hydraulic and electromechanical actuators, whether they are for the flight or otherwise, is something what we are focusing on. That's where we are developing our design team. We just launched our design team now, and our design head will be here in short while. So a lot of new things are happening from build to print to build to spec, but focus remains on the engine.
And you say build to spec, you were basically talking about that you will design the hardware yourself and then get it approved and which
get it approved, yes.
And how big is that journey in terms of build to spec?
So there are various modules which we need to create. Like for example, if you're going for a nose wheel steering, then there are 3 types of valves, including the servo valve, which is a top of the line, kind of technology as far as actuators are concerned. So this is what we are working on. The design team is being nurtured at Godrej, and it'll take about 2 to 3 years for us to venture out into export area. So right now we tend to work with the various local programs, gain experience, and then we'll be ready for flying.
So we are talking about the engine parts. This is the part which engine parts is.
So these are the parts from our GTRE program, the Kaveri 50-ton kilonewton derivative engine.
What is it going to be used for?
It's going to be on a platform which could be a kind of a Hail UAV platform. We are still not sure about the name, but it's going to be on that platform. And DRDO has various use cases which they are trying out and giving it to the ministry. So we await for further decisions on this program. But for us, getting this technology into India, understanding, developing a team is something which has been a great experience, and we are ready to be available when India launches the bigger 100 kilonewton, 110 kilonewton as being discussed with DRDO. So those kinds of work can be done at Godrej now because we are invested, we have the knowledge, we have learned, and that's the next curve. And definitely India needs something very soon because that particular injection is very important to India.
Are you also tying up with global players like a Safran or a GE or any other engine maker to make those parts or engine fully in India?
So we do work for various engine manufacturers. What you see on the right hand side are all engine components. Of course, not as complicated as what you see for the Indian engine, but we are invested with them, and definitely these are the stepping stones to what is the next curve which will happen. So yes, we're working with most of the engine manufacturers like GE, Safran, Rolls-Royce, etc. And we definitely stand a good relationship with them to work on a future larger component like this.
Give us a sense of what kind of products that you make, because you have been a winner of IDEX and also winner of Aditi. These are the 2 programs which Ministry of Defence runs, providing grants to startups. So what kind of products have you won through that?
So as part of Optimized Electrotech, we have been building AI-based imaging systems. These have got edge analytics at the equipment level itself. We have been winners of IDEX multiple times as well as with Aditi now. And with all of that, we have been building different types of products, but the overall structure remains the same. We build optics to AI, everything on our own. For example, this is one of our products. This is a micro missile seeker. This is a micro missile. This is useful for tactical warfare.
This is used in drones.
This is used in drones. So the drones would normally carry the missile. That is how it works. So the micro missile is useful for tactical surveillance, and then the moment it has seen and you have allocated what the target is, what we have built is this seeker. The seeker allows the missile to make sure that only the person or the object of interest is followed, tracked, and then eliminated. So for example, here you can see that the seeker would have different targets that are given. Those targets can be given by the drone and said this is the person of interest, only that person will be followed. This is one of our products. Similarly, we have other products that are for different purposes, like this one is. So this is for a grenade launcher. In this, we have been able to do precision elimination of targets at distances. So in a normal case, a grenade launcher requires you to have a lot of computations being done because grenade travels in a projectile motion, unlike a bullet which travels in a straight line motion. So because it's a projectile, it's important that the corrections are done for wind, temperature, velocity of the, muzzle velocity, everything before you fire the grenade. And thereafter you need to make sure again that it works in day and night. So this particular equipment can work in day and night and can do precision elimination of targets.
You want three IDEX and one
Adi, correct.
And if I'm not wrong, you get a grant of roughly around 1.5 crores for IDEX.
Correct.
And 25 crores for Aditi. How have you used that funds in what kind of development and how big is the company now? Give me something about your company. How big is it now?
So we've been co-founded by alumni of IIM Calcutta and IISc Bangalore, and me and my co-founder have been the major force behind this. And then we also have had business experiences in the past, having exited some of the businesses, having run some cash cow companies. So with all of that, we have been impatient in the defense business. As far as IDEX is concerned, it was just incidental for us. We didn't start the company for IDEX. IDEX just came on the way when we were working on our own AI-based systems. But when IDEX came up, it was a good impetus because 1.5 crores is not sufficient to build a product. But 1.5 crore grant gives you a stamp that you are building something which is going to be useful to the nation. So based on that, then we were able to attract some investors. So now we have Venture Catalyst, GVFL, Equanimity Ventures. All of them have supported us in our journey of defense in the last 5 years. And now as we grow for the Aditi and further more challenges, we also have other investors backing us up. So it's been a fantastic journey so far.
So for Aditi, what was the product that got Aditi?
So Aditi is a space challenge. It is not a defense land-based challenge. In that we are building a neuromorphic satellite. That satellite will be able to look at, do Earth observation. But unlike typical normal sensors, which are imported from Israel, France, US, Germany, other places, this one, the sensor itself is also being built by us. So that is going to be a revolutionary change between what India has been doing so far versus what we will be delivering to Aditi after 3 years.
You've been, talking about how you try to put the building blocks for so that the defense division and it can take off. Take us through some of the tie-ups that you've been doing so that we get an idea of where are we on BML.
So if you say over the last 18 months or so, we have tried to rebuild BML, done a lot of structural changes, brought in a lot of enabling mechanisms within the company, and we have also tried to diversify to uncharted area. One of the major areas was the naval and maritime sector. So when we restructured the company into 11 strategic business units and 2 micro SBUs, the 2 micro SBUs had one as the maritime and one was the SEZ, the special economic zone. And recently we have come out with the 12th strategic business unit, that is sustenance for rail and metro, looking at the kind of rail and metro orders that we are getting, as well as the shift in the model from the acquisition model to the life cycle causal model by both the railway and the metro now. So with that in mind, we also thought that when we are restructuring the company, let us rebrand it. So if you look at our earlier logo, it had a phoenix bird. This was encircled, half circled. So we took it from there, and we thought, okay, let us let us replace the phoenix with the albatross, which is very strong and agile and all that stuff. But then we thought, no, let us go for a new dimension, which is the Infinix. I call it the Infinix. So Infinix is nothing but the phoenix bird, which is imaginary bird, and then make it infinity. So the new logo is a mixture of the phoenix and the infinity. So we call it the Infinix. And the Infinix is basically, again, if you talk about the Vastu, as per the Vastu also, something which is going up is always auspicious, it's always good. So the Infinix is going up. So that's why the earlier tagline was new frontiers, new dreams. Now it is beyond possibilities. So beyond possibilities is something I want the people to think out of box, which is never possible. And a lot of things have happened which were never possible for the people in this company to believe. One of those things was the bullet train.
Yes.
And the bullet train that we are building, the first indigenous bullet train, of course, that is a collaborative approach with the Indian Railway, with Integral Coach Factory, with NHSRCL, BML, all put together. So I'm sure it is going to be the pride of the nation. And that was something which was beyond possibilities of one time. No one in BML at least could believe it.
We were trying to get it from Japan.
But now we are very, very confident that we'll be able to do it. So that is one example of beyond possibilities. And not only that, is a small example. There are a lot of things, when we did the 1500 horsepower engine, the first firing in October 2023, the order book is very small. It's only 867 crores for 2 trains having 8 cars each. Plus, of course, there is developing cost and other things. So order book is really...
But it's more of a technology and the capability.
It's a technology. You see, over the last 18 months, order book is one thing we are working on. But at the same time, we are trying to create value for the country. So the engine program, the rope shovel for the mining, the motor grader, the bulldozer, the dump truck, and now the bullet train, then you are getting into maritime. These are all basically the value creation in the long run and creating value for the country, removing the dependence of the country on foreign OEMs. So that is what we are doing, and I am very happy that we are able to serve the country in that well.
Sir, you've been always involved with urban mobility, metros and everything. Bullet train is something which is intercity, which is going to be coming. Will it be as, the speed will be as good as the one which we talk about of Shinkansen or Japanese train, or is it?
You see, I always talk about crawl, walk, run. So there also, right now, the Shinkansen, it took 6 years for the Japanese, 1950 to 1964. And it is 60 years now since the Shinkansen is running. BML was born in 1964. So to say that straight away we'll jump at 320 kmph is not right for me. So we took a conscious decision that we will design the train for 280 kmph, but it will run at 249 kmph. Because as soon as we cross 249 kmph, 250 kmph, the car body material, the standards, everything changes. So first let us learn at 249 kmph. Already you see the Vande Bharat sleeper that we have, it has operated at 180 kmph. So 249 should, from 180 to 249 itself is a big step, a big leap.
We see that a lot of stuff is happening in technology front, AI being brought into, machine learning being brought into. Where is Cyient DLM in all this?
So Cyient DLM comes with some sort of a very unique legacy. We are, while a lot of our business is manufacturing, but we take help of our parent, which is Cyient Limited, which is a very large recognized engineering services house out of India. It's probably recognized as one of the best aerospace and defense engineering services come out of India. So a lot of it, what we are doing is getting pulled into the products which we are designing. So that's quite unique, and that spans across the spectrum. What is also important is we do a lot of medical, we do a rail transportation, automotive. So there's plenty of cross-learning in terms of ADAS, deep learning, even some smaller based AI/ML algorithms which you can learn, implement lean on embedded systems. So these are being tried. So a big chunk of our business is in the future going to be what we design. And those I would say are quite superior from the algorithm side, which is what you mentioned.
So basically to, manufacturing to spec basically, that kind of stuff. So you have the capability now, the design team and everything in place for that kind of transformation that you want to do?
Oh, certainly. So this has been ongoing for about past 7 years. So when we did this acquisition, we said we should move to for more value, not just manufacturing, not just engineering service, but where we can design, certify, qualify products for our customers, both India and abroad. So from a certification standpoint, and which is quite some technology leap. It's not just the question of this technology, but the certification process. So we have very strong credentials in certifying products with FAA and EASA, the commercial aviation, which probably are more stringent than the defense. And then we see the market more holistically, not just the capital expenses which are happening out of India. Because if it's pure defense, most of the country have local regulations from design on what they can give out. But commercial aviation is more free. And India is a very large commercial aviation market. Even I would say, I think the overall capital budget of at 15 years time frame is probably going to match what we are doing in aerospace and in defense. And there the Indian component of design is very limited. So we are taking both the pieces, that's the commercial aviation as well as the defense integrated, leveraging on our technical capability and more importantly process capability to make products.
So you're currently into aerospace manufacturing, but you're also transforming yourself into electric vehicle, automotive space, or railways, looking at railways. What kind of opportunities that you see there?
So there are plenty of them, and like I would just name a few of them. So for example, we are also doing a complete for an off-highway vehicle for a customer in Europe. We are doing a complete system which is sense and learning, so that it can avoid any obstruction and damages that are coming in. So that's a play with radars, with cameras, with ultrasound sensors, integrating multi-sensor data fusion and predictive, and then controlling this part. And for automotive, it has to come at a very lean price. And we see very strong applications of this in defense, for example, in UAVs, urban air mobility. So there is enough from a technology level, quite a bit of cross-play. That's one example I can give. There is also in terms of motor controllers and the kind of power rails. So while you see automotive is 400, 800 volt DC, same thing you see in urban air mobility. Electrical aircrafts are also talking about similar rail. And there we have the expertise in terms of power conversion, motor controller design. So that's becoming applicable. But all of it is very process heavy. So we basically leverage what we do in commercial aviation across to the other sectors. I'll put this.
Well, take us through. We've been seeing a lot of stuff with respect to aerospace industry, and how you've been growing over the years. Take us through the kind of work that you do for the aerospace industry.
Okay, Sajid, firstly, welcome to our chalet at Aero India 2025. This business is a labor of love. It was a childhood passion of mine. I was an early hobbyist, and in 1993, in a garage behind our hydraulic pump plant in Pina, we started a small startup 32 years ago to build aerostructures for DRDO and HAL. And these were the pilotless target aircraft, the intermediate jet trainer. And then over time, in 2005, 2006, India started globalizing, and we were a pioneer in that. We were a pioneer in the first wave, which was India for India, and then this is India for the world. So what you see here are the flap rack beams of Airbus. So the ones above are the world's largest selling aircraft, the A320 family, which is the A318, A319, A320, and A321. We are sole supplier of the flap rack beams that take the aircraft up and bring it down safely to land. You know what you have under the wings.
The flaps which are
remove the flaps. This one is for the big A330 aircraft, again sole supplier. And over the last 18 years, we are now producing as a sole supplier for 800 aircraft every year.
And what is the kind of order book that you have from Airbus?
So you have to just multiply this business. These are long-term contracts for 10 years. On the basis of this work and high quality performance, on-time delivery performance, we won the order for every variant of door for the latest aircraft, the E220, and you see some of them here.
Okay.
So that's the emergency escape hatch in the
cockpit. Yeah.
That's the O-wing escape door. And these are very complex, high safety products. That's the cargo door. We also have the service door and passenger door, but we didn't have place to display it here. But this order alone is roughly a $500 million order over the next 10 years. And so you could probably say double that, roughly $1 billion over the next, say, 10 years.
And that could be the order only coming from Airbus.
That's Airbus. Now, for Boeing...
Oh, yeah, because I've been looking at some...
We have been an award-winning supplier to Boeing worldwide, but with Boeing, it's all military. So we work on 3 programs. Their heavy-lift helicopter is the world's largest, the best heavy-lift helicopter, the Chinook. So you can see we've been producing the main pylon and ramp for that. Then for the really powerful F-15EX, it's an unbeaten aircraft, the F-15. The EX is their latest fighter. We produce products again on a single source basis. And then the world's best submarine hunter is the P-8. We are manufacturers, sole producers of the power ignition cabinets for that. And then recently we've been working with Dassault. So you go to the Dassault exhibition and you would see this rare fuel tank of their latest aircraft, which is Falcon 6X, which actually goes into service in 2025. Over the last 1 year, we developed all the tools, the assembly jigs, parts, including class 1 parts, and a major assembly which holds the fuel. Is the rare fuel tank. And we work closely with them. It's part of their Make in India strategy, and we're very proud to have succeeded in a very nice way, very quickly for that.
So that's the aerospace part of it, right?
This is one part of it. But what's also important is that we are partnering with a whole bunch of world-class Indian companies to broaden and increase the volume of business that can come to India. Traditionally, these kind of companies that are all peers compete with each other.
Yes.
And in a way, they all limit their ability to grow. What we are all doing is companies like Aker, Sphera, Sansera, LNW, Centum Electronics, Sasmos, we work closely as partners. We hunt for business together, and then we partner each other in how we win the business and distribute it. So it's really together for India. We're really good at it.
In the aerospace segment, technology is evolving on a faster scale. Fly-by-wire, drones, UAVs. These are some of the newer technologies which are coming into play. How is Dynametrics looking at these emerging technologies?
So that's interesting. I told you that 32 years ago we had a startup in Pune. Now behind our aerospace business, which is now a global business, we have a little startup called Dynaton Systems. It's really about autonomy. With a deep industrialization, we have developed a whole family of autonomous systems, a system of autonomous systems, where we have products like our Cheel, which is a big surveillance drone, 15 feet wingspan, ability to fly deep into enemy airspace, collect data. That data is then transmitted down and fed into this, which is a militarized loitering munition. It's India's first jet engine loitering munition. It flies at 600 kilometers per hour. It's called the Katil. And so what you do is you capture all the data. We have a little bit of specialized AI in it. And it actually flies like a bird without a GPS or radio control. So it's autonomous. Once the data has been fed into it, the sighting data, it flies optically with the intelligence on board.
Okay, well, that's all the time that we have on the show for now. From myself and the team members who's put this show together, thank you so much for watching.
entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Welcome back. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. It's not looking pretty at all where we are, both on the benchmark as well as broader markets. 1.5% now on the benchmark. Let's pull up the intraday chart of the Nifty. And there you go. We've slid, and we've slid sharply, at least over the last hour or so of trade. And we're clocking now 23,000 one more time, knocking at that door. We'll have to wait and watch as to how or what to expect going forward, and we'll give you maybe a better perspective as the show goes through. But that's on the Nifty. Let's pull up the heat map. You have some stocks, of course, already. It's a highly pressured market, but seeing more pressure. And those two at the bottom of your screen are those stocks. On the back of earnings, Street not impressed, and you're seeing a 6 to 7% cut on both Apollo as well as Oysha. You're seeing pressure across the board, 48 stocks in the negative, so I'm not going to try to pull a trend here. But there's extreme amounts of pressure across the board. The only two pockets possibly in the green, Grasim again on the back of numbers, and Adani Enterprises, given the newest development with regard to the Trump administration. Let's pull up the contributors as well on the Nifty, and not sure how much that's going to help, but yes, across the board you're seeing selling, but some of the heavyweights also contributing to that. 350 points in terms of negative contributors, and the pressure is really on. Let's look at the breadth of the market as well, and we'll try to try and break down as to why there's just so much weakness at this point. So now this is probably the weakest breadth I have likely seen in a very, very long time. Less than 100 advances to 2,100 plus declines, so very, very weak in terms of breadth, and it's getting worse. If that was even a possibility, that's exactly what seems to be happening. So the market breadth extremely weak. The broader markets is where a bulk of the pain is, and I'm going to toss it across to Neeraj for that. But first off, I'm going to try to cover why we are seeing so much pressure. 5 points. One, we've seen relentless FIIs selling. $11 billion worth of selling is what we've seen from FIIs over the course of calendar year 2025 alone. In 32 trading sessions, we've clocked nearly $11 billion negative dollars of FII outflows which have come through. Second, we've seen Trump uncertainty with regard to both policy as well as tariffs, and some sectors impacted by that. Of course, certain pockets like metals disproportionately impacted by that. Maybe some bit of certainty may start to come through later on this week when when PM Modi meets President Trump. Third, we've seen cut in earnings estimates. Now, this can't be absolutely quoted to all companies, but to a large extent, we've seen cuts rather than increases in terms of earnings estimates. Valuations, well, they were punchy, to be very honest, especially at the broader end of the spectrum. But we're seeing cuts on the Nifty as well, where valuations were okay-ish, and a lot of investors and analysts were quite bullish with regard to where the Nifty was. And last off, weakening global as well as domestic macro, as well as the currency. The global macro, looking from a growth perspective, a slight negative bias coming versus calendar year 24. You're also seeing the Indian rupee continue to weaken. Of course, today it's strengthened, which is a big positive. But otherwise, we've seen a trend of a weakening rupee, a strengthening dollar. Bond yields have bounced back up to 4.5. They've tapered downwards post President Trump taking office. But now we started to see the US bond yield go up. The dollar index, of course, at 108 is closer to its highs rather than lows. And of course, oil prices not helping either, nor does the fact that a possible US rate cut would well get pushed. So all of those macros playing out on Indian markets. But Neeraj, one is your sense with regard to markets, but second is broader markets. I mean, that's where a large part of the pain actually resides.
4% for the small cap index, and that tells you a story or two. I don't need to say anything more really. I mean, almost everything has been taken to the cleaners. 3.5% today, mid caps, but small caps are nearly 3.89 or 3.9%, and that is where the problem is. Kush Bora, founder of kushbora.com, Himang Jani, market expert, join in to share their thoughts. Gentlemen, both of you, thanks for joining in. Somber day, Kush. That buying unfortunately didn't quite carry on. The question only is, are you at these levels, nearly 23,000 on the Nifty, we are revisiting the recent lows. Is there more downside here? Would you initiate shorts here, Kush?
Hi, Neeraj. Hi, Hemant. First up, very good afternoon. Well, Neeraj, if you recall the Friday conversation we had, the message was very clear that this is a recovery rally that we are seeing from the lows, that the Nifty had recently made, and not a reversal one. And this is how typically, a recovery rally would last. You would see bouts of selling pressure. Today, what we are seeing yesterday, on Friday and today, what we are seeing, a bit exaggerated. Monday and today. But this is still, a downturn, and within which we are seeing some sort of rebound. Now, whether we see a bounce or not, there is a slim chance that, we might see, if I have to just, put some data out there, the 23,000 and 22,800 foot still has a fairly decent base, hasn't budged. In fact, they've only added open interest The PCR on the Nifty is 0.66, and we've seen a rebound typically come from the 0.6 level. So there is the case for a rebound, but in a market which is so strongly towards the downward momentum, there is a possibility that you might actually break some support zones and then perhaps attempt a rebound. Will I go short in this market? Not at the moment, because we are, again, as I said, very close to those support levels, 23,000 where we are right now being the first one, and 22,800 being the second one. Any kind of a rebound will actually be taken as an opportunity to sell closer to the 23,300 mark.
Okay. Rebound and opportunity to sell, not right now. Fair call. Hemang, Jani, for every retail investor who might have mid caps and small caps in the portfolio, the last few days have been alarming. Add to that S. Naren saying that it might not be a good idea to be in even in the mid cap and small cap mutual funds, whether SIPs or otherwise, right? So all of that adding fuel to fire. Are you bearish after this nearly 19% fall in the small cap end of the market on the small caps?
Good afternoon, Neeraj. I think it's a fact that we had a bit of exuberance in the broader market, and we are going through a process of cleanup, as we call it. And it's not about fund managers saying, it's more about the fact that whenever you have this kind of frenzy and very high valuations, you do go through pains. Now the point is that there is a bit of a jittery at the investor level, and people are trying to kind of create cash and protect whatever they can. Suppose at one point the portfolio was up 30-35%. Now you're left with hardly, let's say, 8 or 10%. People are trying to even protect that whatever is left over, 8 to 10% also. So exactly at what point this will stabilize or settle, I honestly don't have a view on that. But I do think that at some point when you have this kind of a sell-off across, you will find some good opportunities as well. At the moment, rather than trying to predict at what level it will stabilize, we should try and wait and watch and let it stabilize first. I do think that at the index level, there is a overreaction. I don't think there is a justification in deeper correction at this point of time, given the known facts like earnings, global backdrop. But sometimes when you have a sell-off like what we are seeing, there can be a stretch on the downside. So we are of the view that there is not a case for a significant downtick, but we should let the market stabilize before jumping in.
Okay. Kush, if I can come to you, picks in this very difficult market.
Only difficult if you're looking at the long side of things, right? Today I'm not as much. Today I'm not. While the market does present you an opportunity, on the short side, why not take it? So I've got two calls, both of them on the short side. One of them is LIC. Again, we've seen a breakdown. The stock had actually taken support at near that 800 mark for 3 times, including yesterday, but today it's broken down below that level. Again, volumes are significantly higher. So on the downside, you're looking at targets of 780, 770 with 810 being your stop loss. The other call on the short side is IOC. Again, the entire pack has seen fair bit of selling pressure. Every opportunity towards the 20-day moving average in this and its peers has actually been an opportunity to short and create more shorting positions. So IOC, you could have taken your entire pick from the entire space. Right now, I've taken IOC. The reason being that even this has retested and probably gone just below the support zone of 120 or hovering thereabouts. On the downside, your targets are 117 and 114. Stop loss comes in at 124.
Okay. All right. So those are picks for this afternoon. Varsha, in fact, is waiting by because Apollo Hospitals is our stock of the day. 7% down. And, 6% plus, nearly 7 at the bottom. But on the back of numbers, which didn't look as bad, right, Varsha? So talk to us about what's gone wrong.
Yes, so technically, in spite of inline numbers, the stock is under pressure. In spite, all the other hospital stocks are also under pressure. You take Yatharth, You take Max Life, every other hospital is under pressure. Now one of the reasons is Adani to partner Mayo Clinic to establish affordable and world-class healthcare facilities. Now they're going to build 200,000 bedded multi-super specialty hospital and medical colleges in Mumbai and Ahmedabad. So this might be one of the reasons, all the hospital stocks are actually under pressure. To speak about the numbers, so for Apollo hospitals, the number were pretty much in line. Though, net profit was up substantially, this was also aided by other income, a good growth in other income. But apart from that, all the numbers were in line. So if talking about the segmental performance of the hospital business, there was a 10% year-on-year volume growth, and a focus on higher growth specialties actually aided the revenue realization for the company. Overall hospital occupancy, if I were to talk about, rose to 68% versus 66% last year. This was driven by increased patient volume. Apollo Health and Lifestyle Limited, if you see there also, the revenue grew 15% year-on-year, primarily attributing to maturing network. And the Apollo Health Co, which consists of your Apollo 24/7, the PAT was positive versus loss seen last year on account of the positive PAT is on account of growth in operational revenue and of course optimization of 24/7 operating cost. Lastly, speaking about their expansion plans, they are on track to add 3,500 beds over the next 3 to 4 years starting from FY26.
Okay, so some positives, some negatives. Kush, let me come to you first on the technical side before I go to Himang on the fundamental.
Well, I mean, of course, today Apollo has taken a big knock. 200-day moving average being held on to for the last month and a half. Finally, given way on the back of very strong volumes. I think this one's a very clear avoid at the moment. But I wouldn't say that, Harsh, for the rest of the hospital space. In fact, just last week, we had given out calls on Krishna Institute of Management and Narayana Hrudayalaya. While both these stocks are down, you will notice that the volumes on these haven't even clocked the last 1 month's average. So I think for me, some of these, dips actually present a buying opportunity. So I will stick with, KIMS and Narayana Hrudayalaya as the buying opportunity in the fall that we are seeing. Some of it, what Varsha said, could be the sector-related news, also clubbed with the fact that, the markets are, where they are today, in the red. So that could have actually exaggerated the fall for at least the Narayana Hrudayalaya. But if you see, as I said, this is on the back of good volumes. So if you want to look for a buying opportunity, keep KIMS and Narayana Hrudayalaya, on your radar.
Okay, so that's as far as some of those healthcare stocks go. Now, on to numbers which came out, and MTAR Tech came out with a set of numbers which optically would have, maybe pleased some of the investors for sure. Revenues were up 47%, margins were flattish, net profit up 53%, flattish in the sense from 20.2, it came down to 19.1, but in or around that 100 basis points range. Parvat Srinivas Reddy, who's the managing director of MTAR Technologies, joins in right now. Mr. Reddy, good having you. Thanks for taking the time out. Put the quarter into perspective. Was a 47% revenue growth something that you were baking in when you kickstarted Q3, or were you hoping for a different outcome?
Yeah, we are hoping for a similar outcome when we kickstarted Q3, and the Q4 is going to be even stronger than Q3 as well. So we are in line with what guidance we have given for FY25.
Okay. What's led to this growth, Mr. Reddy? Could you just explain that? And are those the factors that continue into Q4 as well?
Yes, for sure. And obviously our aerospace segment, clean energy segments are doing very well. And we have done a lot of developmental activities in terms of first articles. Now the volumes are kicking in slowly. So that's how the revenues are going up, and the margins will also improve further by end of the quarter.
So I want to try and understand from you. You're of course growing off a low base. For the next 2 to 3 years, what's the journey with regard to growth going to be like? What's the visibility?
Yeah, that's a very good question. The last 18 months, we have been working on various projects, various areas, adding new customers as well. So we have a clear roadmap for the next 3 years. We are going to grow at the rate of 30% revenue growth year-on-year basis for the next 3 years consistently, more or less. And also the margins are going to improve by 2 percentage points in each of these years. So we end up with 24% margins by FY26 and thereon 2% incremental margins year-on-year basis. So we are very optimistic about this based on the kind of work we have done over the last 18 months.
And so where would the growth come from? Would it come from domestic? Would it come from export? Where would a bulk of that come from? And how would the mix therefore change, if at all?
The growth would come from domestic as well moving forward because of the nuclear division and the defense programs what we are working on. Obviously, the exports, we are dealing with a lot of MNCs right now, so growth would come from there equally as well. So it's a mix of both, slightly more tilted towards the export side, about 60 to 65%, and 35% from the domestic segment as well.
Mr. Reddy, just wondering, when I look at your numbers, and please correct me if I'm wrong here, but for example, December 2022 or thereabouts, right? On a similar base of revenue, I mean, you did much higher margins, you did much higher profitability as well. Now, when I hear you say that you anticipate that you will grow about 30% CAGR for the next 3 years, would it be on the revenue front, or would it be on the revenue front while maintaining or improving margins from the current 19% over that 3-year period?
That's exactly what I said. We're going to not only increase on the revenue front 30% basis, but also the margins are going to improve 24% to 28% by the end of the 3rd year. So that's what we're looking at.
Okay, I didn't hear you. Okay, fine. So I missed that, but you are saying that from the current whatever 19% EBITDA margin, you move up to nearly 28%, let's say by FY27. Would that be a fair assessment?
FY28, that's what I meant, the 3rd year.
FY28, yeah, excuse me. We're at end of FY25. So FY28, you reach there. Okay. And would you, I'm guessing some of this might be coming in by virtue of some capacities coming on stream, etc. Do you need to do any kind of capital raise in order to execute or set up new capacities for this 30% CAGR growth? That's virtually doubling or more than doubling in 3 years' time by virtue of growing 30%.
No, we don't need any capital raise. We're funding it through internal accruals and whatever small debt we raise. That's about it. We don't intend to raise any capital. We can easily fund our growth internally. That's absolutely not an issue. And if you look at our operating cash flows, also positive operating cash flows of 102 crores for this particular quarter, which is the highest. So we are improving on the working capital days as well, and also on the operating cash flows, positive operating cash flows as well. So we will not be going for any additional capital raise to fund this growth.
So while you're in some of the more new age sectors, if I can call it, whether you call it aerospace, defense, clean energy, as well as nuclear, I want to focus more on nuclear because of the budget allocation in nuclear. First, I want to try and understand from you how many players compete with you with regard to nuclear, and therefore how large is the opportunity size for you and all of your competitors combined?
See, the competition is very less in nuclear because the learning curve is very long. It's something, an area which MTAR was there for the last 35 years. Now, if you look at the opportunities that we have an immediate opportunities with respect to nuclear in terms of Kaiga 5 and 6, where we're expecting close to 500 to 600 crores of orders flowing in. Then we have refurbishment of reactors, 5 reactors coming in. So overall, I'm looking at what is the low-hanging fruit here is that we're expecting about close to 1,000 crores of orders coming in from nuclear division over the next 3 to 6 months. This is apart from what the government has announced, the budgets and all, that's all there. But we have enough on our plate, and all these projects have to be executed within the next 24 to 36 months. And that's what excites us more, and that's where your growth is also coming from the domestic sector.
And so just some visibility with regard to execution there, because what you are saying is 1,000 crore worth of orders. Is this specific to your internal target? Are you looking to win around 1,000 crores worth of orders, or is that the total opportunity size? That's my first part. Second part on execution, how quickly does execution start to play out and it start reflecting on your P&L?
this is exactly what we are going to get. It's not what opportunity. Our opportunity can be more, but this is what we are going to get. Point number one, which is very clear. And the second part is the execution plan for this is about some of the projects are from 18 months and some are up to 36 months. So overall, you look at a 3 years period where you have to execute this entire 1,000 crores. That's where it is from the date of the purchase orders being released.
Interesting. Mr. Reddy, are there any newer products that come into this bucket? Simply because the reason I again ask this is, and I'm reiterating, right, because hypothetically, I mean, I was looking at your numbers and I'm just trying to go with numbers because currently the market would be very intrigued with what comes out in terms of numbers, right? So if you've done circa 581 crores into FY24, right, and let's say you nudge about maybe 750 odd crores in FY25, hypothetically, right? If I do a 30% CAGR, it leads up to a number between 1700 and 1800 crores on margins. If they go up to 28% for a bottom line number in FY28, well in excess of 160, 170 crores. These are plausible estimates, you reckon?
These are definitely plausible estimates. The reason I'll tell you, last 1.5 years, we're working on various new customers, various projects. In engineering, as all of you know, it takes time to build the projects in terms of first articles, getting the certifications done, qualifications done. We have done a lot of product developments as well. So we have a very clear roadmap. So when I say 30% CAGR, it's very clear that we'll cross about 700 crores plus this year. And then from there on, we move on to a comfortable position of 30% CAGR year-on-year basis and improving our margins as well. So we have a very clear roadmap for the next 3 years, and a lot of effort has been done in the last 1.5 years, which you don't see in the form of numbers right now.
Of course.
And also, in terms of employee benefit expenses, we have been expanding our team for the future of the company. You know, if you look at our employee benefit expenses have gone up, that's eaten into our profitability, but that's just an investment. You don't just investment on assets, but you also invest on the team. That's what exactly we are doing. And for that, everyone should understand that we are doing this for the future of the company.
Sure. Can I just ask one final question, Mr. Reddy? And again, please excuse me because you are right. I look at the numbers. A lot of things are not available on the numbers. But because I'm looking at numbers, I'm asking this question. Right? What had led to, and excuse my not knowing this, but what had led to this dip from 28% EBITDA to 13% EBITDA in March and June 2024, and it going back to these 28%? So what was it? Was it investments? Was it some bad luck in business, or what have you? What led to this?
No, there's no bad luck in business, but there will be certain setbacks. Like we had some shipment deferrals during that period. One of our export customers had deferred certain shipments because there was a change in the model what we're working on, a particular design model which we're working on. For better efficiencies, we had to develop a new model, which took us almost like a couple of quarters we were affected, but we were back on track. But also what we did was we have added multiple customers right now in multiple verticals, so that would not have that kind of a situation moving forward as well. So we have taken a lot of corrective actions in the past 18 months. And moving forward, we'll have a lot of verticals which will be firing up in terms of volume production based on our first article qualifications.
Great. Mr. Reddy, wishing you all the best for that and more. Thank you so much for taking the time out, and I look forward to talking to you post your quarterly numbers at the end of FY25, if you will, just to see how is it shaping up. But lovely talking to you today. That's MTAR Technologies. Hemang Jani, these days, I mean, everything good, bad, ugly is getting beaten down. MTAR, good numbers. Stock is down 3.5%, but you heard the management as well. You like the confidence, and I don't know if you studied this business at all.
So Neeraj, not looked at MTR technology, but defense, we have seen deep cuts across, and this is despite many companies delivering a very good let's say VL, the case in point, the growth was almost about 35-40%, very good guidance. Even in budget, you had 12% kind of growth in the allocation to defense. HAL also similar kind of a story. And now Mr. Modi is in US, and probably you may get a little bit more clarity, and some of the apprehensions that people have about the defense order flows or something on the order front, that can, we can have some, news flow around that. I do like the stories maybe because of the, kind of over ownership that we saw for some pockets. They are going through a bit of a correction. But given the pure fundamentals and the growth, I definitely would want to buy BEL and HL.
Okay. Right. Right, Himang. Kush, your quick thoughts with regard to the technical side of things on this one?
Harsh, the stock is nearly 50% down from the high. The only saving grace or silver lining, if at all we're looking for one, is that this is the low that the stock had made in March of 2023, which means this is the long-term support that the stock is now testing. The volumes on the way down are thinning, which is also an addition. But I still wouldn't want to buy it just yet. I would want to see some sort of a revival and some sort of a confirmation on the price action. So maybe above the 1550, 1575 mark, about 100 points up move from here. Perhaps the stock could start looking a little more stable, at least technically. That's when you should consider. At the moment, long-term support average support being tested. So put it on the wait and watch.
1,000 crore. Okay. Okay, Kush. Right. So those views coming through. But let's again go back, talk about the larger market. Now, Nifty slipped below 23,100. In fact, 23,000 now. We're below 23K levels. The Sensex has tanked as well. Mahima is joining us to tell us how have markets fared from the recent highs in September and give us perspective on what could be in store as well. Mahima.
Right. So, just to give perspective to our viewers in terms of the mid caps, the small caps, and the Nifty 50. If we see the Nifty 55 stocks, let's see the mid caps first. 11 out of 150 mid caps are trading below its RSI 30. In terms of the small cap, 23 out of 250 small caps are trading at the RSI below 30. And for Nifty 50. 5 stocks out of the Nifty 50 stocks are still trading above the RSI 60. So this is the overall picture of how all of these indexes are faring. In terms of the worst performance of the Nifty 50 stocks from its highs in September, it's a mixed bag of auto and the consumption space. Hero MotoCorp has fallen 32%, Trent 31%, Asian Paints 30%, Bajaj Auto 29%, and Tata Motors 29% from its highs. This, with respect to the mid caps, the worst performers have been Godrej Properties down by about 39%, Suzlon 38%, Thermax 38%, Delivery and Mangalore Refinery are the other two counters which have fallen 34% and 33% respectively. And the small cap, the worst performers that have fallen the most from its highs are Honasa Consumers on the back of how earnings have panned out for them. Their losses have widened 57% from its high. Sterling Wilson 55% from its high. Whirlpool India, where Whirlpool the holding company, the corporation, is planning to sell further stake, down by about 50 odd percent. Chennai Petroleum down about 45 odd percent. Sobha down about 42 odd percent. Small caps have seen more pressure as compared to the mid caps when it comes to falling from their highs. So this is the overall perspective, and of course the stocks which have seen the most pressure when it comes to these markets, these falling markets in fact.
Okay. Thanks for that perspective, Mahima. Always good having that perspective on a day like this. Even I was a bit surprised, Neeraj, with the way in which some of these stocks have fallen. And there are a slew of counters in the last 4 months which have fallen 50% plus. Honasa, Whirlpool and the like. Just been a one-way ride for some of them. 50% of investor wealth wiped out. I wonder, you virtually have to double your money to recoup that. And that's what's probably adding to the pressure as well.
Yeah. I mean, and which is why I think a lot of, I think the one thing that this will do is, I don't know about all the markets, but certainly make people very cautious about investing in IPOs. It had become there were businesses launched which specialized in subscribing to the IPO and flipping it. I think that goes out of the window, and with good reason.
Right. Yes, absolutely. In fact, we did this piece on IPOs yesterday as well, Neeraj, where a lot of them, maybe 50% plus at the very least, have actually not made money even in the medium term. and therefore, that kind of vindicates and validates your point. But Hemang Jani, thanks so much for joining us this afternoon. We'll let you go. I know it's been a brief chat, it's been a brief conversation, but the texture of the market has been difficult, and we always value your views here. But we'll slip into a very short break. It's that time of the show where we'll take that break. Stay tuned. More perspective on NDTV Profit on the other side. Thanks.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
New tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching India Market Close here on NDTV Profit. It's that time of the show where we take insights from everything that Somit's been hearing on the street, and on a crucial day like this, it becomes even more interesting to hear about what he's listening to. Somit, are you hearing calls, mild ones, of buy?
No. Straight answer, no. The market sentiment is very bad. In fact, for mid and small cap, what I've been understanding is that HNIs have been winding up their position. A lot of M2M losses is what they have incurred, and there are no new buys when it comes to mid and small caps, at least on the HNI desk, and that's a clear sign. FIs have been a clear seller that we know. DIs also not much of a buy coming in, and HNIs have also been winding up position. No new buys have been done. They're clearly in wait and watch mode, and they're waiting for some solid signs of buy flows coming in, especially from FIs when it comes to mid and small cap. So that's the first thing that I'm clearly getting in, and that is that there are no buyers when it comes to mid and small cap. Stock specific, REC, PFC and IREDA, all three power financiers are on dealers radar. What we are understanding is that there have been serious delays when it comes to signing of new renewable power purchase agreements, and that could have an impact on the power financiers also, and hence there have been strong sell flows, aggressive sell flows when it comes to REC, PFC and IREDA. And lastly, it's Max Healthcare. Now this has been on dealers radar. The stock is down 5%, but there could be some buy flows on this counter, so keep and watch out for this counter because there could be some initiating note coming in from some big broking firm, if that is what the dealers are indicating. So keep an eye out for Max Healthcare in trade at least. The stock is down 5% today, but this is on brokerage radar at least. Could come in.
Okay, could be interesting if. But Sumit, thanks so much. So that's the intelligence viewers. Now, how it plays out remains to be seen, right? Today was a large brokerage house giving a note on Swiggy, and unfortunately, by virtue of the fact that the overhang of that pension scheme for gig workers is on track, so Swiggy is down 7% today after Citi initiated a fresh buy on that one. So quite interesting, the nature of the mood in the market. Avinash Gorakshekar of Profit Mart Securities with us, and of course also joining is Aditya Agarwala on the technicals. I want to take forward that point on Swiggy, Zomato. Avinash, with you. I'll start off with you on this. Slam dunks on both of those in today's trade as well. Now, if one were to follow the principle of buying stocks which have fallen the most and which have a long runway of growth, then Swiggy and Zomato fit the bill day before yesterday, right? And they are still getting hammered. What's happening here?
No, I think Neeraj, good afternoon first. My sense is, I think we all are now addicted to Swiggy and the Zomatos of the world. So I think this news about pension being paid to the gig workers is definitely going to dent into the profitability of both these players initially. But I think they are smart companies. I think all said and done, whatever incremental cost is going to be accounted by the pension towards these gig workers is going to be finally recovered from the consumers. And I think this is an industry where there are not many players, just two players. So I think clearly in the short term, on a bad day, the stock is corrected, obviously on the downside. But I think over the longer term, I think all these price corrections could be neutralized. I think none of these companies are going to take that cost on their on their balance sheet and on their cash flows. It's going to be a passed over component. So my sense is that this business is going to grow by leaps and bounds, and I think I believe that only the surface has been scratched. I think there's a lot of runway available for both these players, and obviously I think Zomato looks much better than Swiggy, because considering the fact that they have now got a very strong focus on profitability. Swiggy on the other hand could struggle in for some more time. But Zomato definitely looks to be quite ideally positioned, and somebody who's got at least a 2-year kind of plus view. I would not be surprised that eating habits and consumption trends are not going to change for players like Zomato. So I think on a broader level basis, I think one can definitely say that this is definitely a short-term setback for the company. But longer term, I think this will definitely get neutralized.
Right. Okay. So expecting some bit of neutralizing to happen. That's Avinash, of course, with regard to Zomato and Swiggy. Aditya Agarwala, what are you making of markets at this point?
Markets are definitely looking a bit weak. There is no doubt about that. But I think if you talk about Nifty and Bank Nifty specifically, Harsh, I think they're not going to see that kind of a waterfall kind of a correction. If I talk about correction in the markets, Nifty Bank Nifty could remain sideways to a range bound movement. So 29 on the Nifty, I think 22,900 to about 22,800 something that can hold ground on the upside. 24,000 will continue to act as a hurdle. So I think and then the bank Nifty, if I talk about, I think so 49,000 on the downside and 50,000 on the upside will remain as a resistance. Both the Nifty and the Bank Nifty should continue to oscillate in this band. It is the broader market, Harsh, which I think is dealing with kind of a sell-off, and that is likely to continue. I still believe there is room for downside in the mid cap and the small cap end of the markets, and that is where one needs to be a little more cautious and tread very cautiously. Look at stocks which are fundamentally strong, or maybe which have corrected significantly, are at good strong support areas. So stay away from that area. Otherwise, I think so if you're looking at large caps and banking indices.
Aditya,
yeah.
So mid caps and small caps have stocks in derivative space as well, right? You are negative here. Now tell us, where is it that you will go short?
So Zomato is one which I would go short. Neeraj, you were talking about Zomato and Swiggy. Zomato is one which I still feel has more correction on the downside. 190 is what I'm eyeing for on Zomato. One can look at fresh shots in Zomato at current levels, I think.
Okay, he's following, well, he's putting his money where his mouth is.
Yeah, absolutely.
Yeah. Okay, sorry, I pushed you onto a short idea, but what about your top calls for the day todays?
So Zomato is one which I'm going short on clearly with a stop loss of 225 or target of 190. The one that I've got a long recommendation is on Adani Enterprises. I think so it's done with its correction and consolidation. So Adani Enterprises is something which looks interesting to me. And if Nifty holds ground, I think so Adani Enterprises can be looked at current levels for a target of 2,500 on the upside. Place a stop loss somewhere around 2230, 2250. And Adani Enterprises can spring back and surprise you on the upside, I believe.
Okay. All right. Fine. Okay. So that's of course picks coming in from Aditya Agarwala, but I want to quickly take a view from Kush as well. Kush, talk to us about something like a trend. We've seen a huge correction where the stock is concerned. What's the technical chart looking like at this point now?
Again, I mean, not so encouraging. There was a hope that the stock would take support around perhaps the 200-day moving average, if not then the 20-day moving average, which is actually a lot lower than the 200-day moving average at the moment. Hasn't really been the case, and we know that this stock has actually started falling long before the markets did. So this kind of pressure, I think, remains. The saving grace on this one is that the 5,100 mark is a medium-term support zone. Last year somewhere, May to June, July, that's where the stock spent a lot of time before it moved upwards. So you could see some buying emerge, at this level. But I wouldn't really bet on it or preempt it. The reason being that the market scenario then and the market scenario now are very different. So any breach of this support zone of 5,000 could actually take the stock lower to 4750, 4800 kind of zones as well. Is it time to start nibbling into the kind of fall that the stock has already seen? Not sure. Again, because the reason being the volumes are not drying up on the way down. In fact, if you see for the last week or so, the volumes have actually picked up. So I would wait and watch. Look for a strong support zone near the 4700, 4750 mark. If 5,000 is breached, perhaps there, some accumulation can start.
Avinash, if I can take a quick call from you with regard to, let me push that thought. Let's look at the top 3 stocks on our radar today. First off, Mahima joining us with those 3. Mahima.
Right, so I'll start with Devyani International. The earnings came in and it looks like a strong set of numbers. Revenue was up 53%, EBITDA was up 43%, but margins have taken a hit to around 16.2% from 17.4%, and they've incurred a net loss of around 49 lakh versus a profit of 9.6 crores. Now why? What has led to these losses? First of all, cost of raw material has gone up significantly. It's gone up by 64%. Finance costs have gone up by 39%. Depreciation has gone up by 50%. 58%. This is due to aggressive store expansion strategy. They've added around 250 net odd stores this quarter itself, and even the deferred tax went up to around 151 odd crores. All of these factors have led to loss of around 49 lakh rupees on the counter. In terms of store addition, the net new stores added in 9 months FY25 was around 250. Total 2,000 stores stand around Q3 FY25, where the guidance is already met, is what the management has said. In terms of the store-wise revenue and brand-wise revenue, KFC revenue growth was at 7.6% YOY. Same-store sales growth, however, lowered to 6.4 and was at minus 6.4 versus that of minus 2.7. So same-store sales growth has slowed down further, and this is of course on the back of more store additions. Pizza Hut revenue growth was at 1.8% YOY, but same-store sales growth improved to minus 5.2 from a minus 9.4 earlier. This is all 9 months FY25 data. And Costa Coffee revenue growth was quite significant, and this is on the back of a lower base as well. It grew around 37% YOY, and same-store sales growth, however, reduced to 3.9% from 7.9%. Now, this is with respect to Devyani, but the other two counters that have been buzzing on the back of earnings today are Grasim and Nykaa. In terms of Grasim, revenue was up 27 odd percent, EBITDA was down 48%, margins have taken a significant hit from 8.2 to 3.3, and there was a net loss of 169 crores versus a profit of 236 crores. In terms of key highlights with respect to segments, cellulose fiber EBITDA degrew by 18 odd percent, and China operating rates improved to 89%. Chemicals EBITDA increased by 25 odd percent, and caustic soda international average spot prices stood higher by 16% YOY. Building materials EBITDA was down by around 14 odd percent. Birla Opus, out of the 6 plants overall, 4 are already operational, and they've already incurred 9,015 crores of capex, which is almost 90% of the planned capex. Financial services overall lending portfolio was up 27 odd percent, and total AUM was up 23%. Other businesses that includes textile, renewables and insulators, EBITDA remains impacted by exceptional high input prices in linen segment, and renewable business cumulative installed capacity was up 37%. Lastly, Nykaa revenue was up 27 odd percent, EBITDA up 41%, EBITDA margin improved by 63 odd basis points, and net profit was up 52%. This counter has done well on the back of festive season, plus the Nykaa land initiatives that they have taken, and of course the discounts being given. Consolidated gross merchandise value grew by 25 odd percent. Beauty segment was up 32%, and beauty segment saw volume growth of 30 odd percent. Nykaa Fashion also witnessed a revenue growth of 21 odd percent. And lastly, the management has said that they are not seeing any kind of competition playing its role against their market share being eroded. So that's a positive commentary coming in from Nykaa management, and these are the top 3 earnings on my radar, at least for today.
Okay, thanks so much for that, Mahima. Really detailed link setting out the context with regard to those 3. Avinash, if I can come to you, all 3 relating to consumption. Devyani, different segment. Grasim, different segment. And Nykaa, completely different segment. How would you play consumption at this point? And at what point, if at all, would you start buying?
No, I think, Harsh, my sense is that if you look at the numbers for Devyani, I think one major disappointment has been the same store sales growth. I think for both the segments, KFC as well as Pizza Hut, I think, markets were expecting that at least some marginal uptick in the same store growth would come in. But I think on both those fronts, that has been negative. But on the positive side, they have now added a significant amount of stores. Now their total count is around 2,000 odd stores all over India. So I think, you'll have to wait for some time. I think clearly, the January to March quarter may not be all that great. But from April onwards, hopefully consumption should pick up. I think with the kind of fiscal benefits announced in the budget, plus, hopefully, I think, customers coming back and spending more time on the dine-out facilities. I think Devyani definitely deserves a good amount of re-rating once numbers start improving. I think for the last couple of quarters, we've seen Devyani not performing very well, specifically on the net profitability side. But considering their parentage, which is Varun Beverage Group, I would say that this is definitely going to be a dominant player in the QSR space. So I wouldn't be surprised if the stock remains where it is. I don't think further downside looks possible, provided, of course, the January to March quarter is not another bad quarter. But they have shown a decent amount of performance in the quarter 3 as compared to quarter 2. So I think in that perspective, I think it definitely deserves to be added in the portfolio if one were to take a long-term view, because I think consumption is definitely going to pick up. As far as Grasim is concerned, Harsh, I think these numbers were on expected lines. I think all their businesses have been down, but I think the paint business is currently in the built-up stage. A huge amount of capex has been incurred, and I think initially, the kind of exuberance which was done by them, I think clearly markets have realized that it's going to be a kind of a competitive war in the paint market. So
Avinash, allow me to come in. Manish Suntal is also there, but we need to cut across to Prime Minister Modi as he's speaking in France.
To draw an image of someone writing with their left hand, the app will most likely draw someone writing with the right hand, because that is what the training data is dominated by. It shows that while the positive potential of AI is absolutely amazing, there are many biases that we need to think carefully about. That is why I am grateful to my friend, President Macron, for hosting this summit and for inviting me to co-chair it. Friends, AI is already reshaping our polity, our economy, our security, and even our society. AI is writing the code for humanity. AI is writing the code for humanity in this century. But it is very different from other technology milestones in human history. AI is developing at an unprecedented scale and speed, and being adapted and deployed even faster. There is also a deep interdependence across borders. Therefore, there is a need for collective global efforts to establish governance and standards that uphold our shared values, address risks, and build trust. But governance is not just about managing risks and rivalries. It is also about promoting innovation and deploying it for the global good. So, we must think deeply and discuss openly about innovation and governance. Governance is also about ensuring access to all, especially in the global south. It is where the capabilities are most lacking, be it compute, power, talent, data, or the financial resources. Friends, AI can help transform millions of lives by improving health, education, agriculture, and so much more. It can help create a world in which the journey to sustainable development goals becomes easier and faster. To do this, we must pull together resources and talent. We must develop open source systems that enhance trust and transparency. We must build quality data sets free from biases. We must democratize technology and create people-centric applications. We must address concerns related to cybersecurity, disinformation, and deepfakes. And we must also ensure that technology is rooted in local ecosystems for it to be effective and useful. Is AI's most feared disruption. But history has shown that work does not disappear due to technology. Its nature changes and new types of jobs are created. We need to invest in skilling and reskilling our people for an AI-driven future. Friends, there is no doubt that the high...
Well, PM Modi speaking about reskilling as well, skilling and reskilling for an AI-driven future, also warning of the dangers around it. Well, one person who warned of dangers around mid-caps and small caps a little while ago was Manish Sonthalia, and we have him as well. Kush Bora, I know we haven't come to you, we'll come to you in a moment, but I just want to do a small conversation with Manish Sonthalia. He's Director and Chief Investment Officer at MK Investment Managers and joins us right now on the show. Manish, great having you. Thanks for joining in. And the reason I say it's great having you is because it's important to try and understand what do you think about the near-term trend. One is that because there's incessant selling, the easy answer is that there is very high probability of this going down further. Is there an extent that you have penciled in mind where you will believe that the valuations are starting to look interesting, or is it a moving part depending on what happens to earnings and the global macro?
So, Neeraj, for some time it was very clearly known that India's earnings are not going to be more than 10 to 12% for FY26 and FY27. In that backdrop, Nifty 50 would not support levels beyond 22,000, 22,500. I mean, that was a very clear given. Run up to Modi ji's results, the third term, on June the 4th, if I'm not mistaken, June the 4th, the levels on the Nifty were closer to 22,000. Now, in the euphoria of this 400 seats and whatever number was touted at that point in time, we took the markets up from 22,000 to 26,200. That was the excess part. And now, because of that excess being given up, we are looking at the levels back to being normalized at around 22,000. So the sense that I have, based on just fundamentals, pure fundamentals, is that markets will broadly bottom out closer to that 22,000 odd level. I firmly believe that markets would not sustain below 22,000 for a prolonged period of time. I don't know from where the buying is going to come, but clearly there will be merit in buying India at those levels. Secondly, Indian currency was overvalued. That was also clearly known, and Indian currency has depreciated. In the last 1 year, February 24 to February 25, from 82 rupees 90 paise to 87.5 or 87.90 yesterday. So that is also closer to around 88. Maybe we'll go down to 90, but that would be the worst. So I would believe the last 5% is where the maximum capitulation is happening. These are great times to buy, and as we have seen in previous crises, whether it be the global financial crisis or the COVID times, whenever there's this such letting down of the, just throwing away stocks at any price, those would be great times to buy. Now, as regards the mid and small caps, again, there was a caution that yes, valuations were running ahead of previous highs that we have seen in Indian markets, some 35-40p. These were not sustainable. But it would be not correct to actually paint the entire mid and small cap space in the same brush. My sense is that if, let's say, the Nifty is trading at 20p and the outlook on Nifty earnings is like 10% growth. Like mid caps and small caps, if you're looking at buying more than what Nifty earnings growth is and valuations closer to Nifty earnings valuation, you should broadly be fine. So just to say that the mid and small caps will fall down big time, I don't think that's there's enough merit in that, because if you just look at even the large caps, leave aside the Nifty 50, the Nifty 50 next in the month of January has also fallen some 7%. So just to say that large caps will do well and mid caps and small caps will not do well, I don't think that's going to have too much of a sound logic at this given point in time. It's too late to sell. This is the last bit of capitulation that you're seeing in the markets. Rupee has broadly fallen, maybe another 2 to 3%, and markets would have broadly fallen another 5 to 7%, 5% at the maximum, I would believe, and there would be comfort in buying at those.
Harsh, I don't know if Manish turns out to be right or wrong, but this is the advice, and this is the answer that is needed. One, that it is too late to sell a lot of things also, and two, the market capitulates around these levels. I think this is the answer that is very much needed. In some sense, Avinash spoke about it others, but Manish has just encapsulated it beautifully.
Yes, absolutely, Neeraj. Manish, Harsh also joining in. What I'd really be curious to understand from you on a day like this is, bulk of the pain has been faced by stock sectors and segments which are fast growing and where earnings for many, many years into the future, even though still realistic, were discounted. In the next 1,000-point odd fall that you broadly are suggesting will happen, what will be those sectors which will face a bulk of the pain? Will it still continue to be these segments?
No, so the budget that was presented, highlighted a few things. First is that the government's inability to spend more than 10 lakh crores. The last year budget figure of 11.11 lakh crores has been whittled down to 10 lakh crores. My sense is that the number of projects, etc., still needs to be finalized and all of that. So, sectors which were trading high beta and very high valuation based on order book figures for the next 5 years. And I have alluded to this fact that long dated order book positions can't be valued in the near term at the valuation that with the markets were valuing. So all the investment, this budget has basically told you that the pendulum swings away from investment related themes to consumption related themes. So I think, the maximum brunt of selling is happening where PEG multiples are more than 3. And it could be in any sector. But broadly, what we have seen over the last 3-4 years is that the capital goods, infrastructure, railways, defense, power, renewables, it has been glorified a lot. And, you are pricing in, let's say, the next 5 years of earning. That would not stand. And that is what is basically, likely to face the maximum brunt of the selling. On the other hand, given this 1 lakh crores of savings, creating a multiplier of anywhere between 3 and 5 lakh crores on the consumption side, the consumption which has not done well in the last 2-3 years is going to be the new bright spot in the markets, particularly the discretionary side of things, which has been quite overlooked for some time. Because not only would you likely see earnings growth, but you could also see some multiple expansion, because you're talking about the multiplier of anywhere between 3 and 5 lakh crores. and the 8th pay commission recommendations are yet to come. And if the fitment factor is anywhere between 2.5, then of course that's again going to be an icing on the cake as far as the consumption is concerned. So the glorified sectors of the yesteryears, last 2-3 years, which had gone out of sync, whereas the earnings and the valuation are likely to correct more. Where there is value, deep value, contra, the banking, the insurance, these are some of the places which are likely to up.
Okay, Manish, if indeed, just one question from mine, and that's this last question from mine at least. The government, in order to reach the targets as they set out for FY25, would mean significant capex uptick in Feb and March. Sequentially, it will look very strong, but even an absolute number would be large, number, and therefore the news flow would be strong, right? Would it therefore entice, and some state level capex numbers as well are looking solid, right? I mean, Andhra Pradesh is doing this whole new city, etc., so on and so forth. Bihar might do that. Would some of the infra, capital goods, cement led names look possible candidates, because there too the correction has been fairly swift?
So cement is clearly a proxy on housing, and given the impetus that is given on 2 houses for self-occupied being away from the tax bracket, I mean that's going to be beneficial, and obviously a lot of impetus on household savings, that's going to be beneficial. So anything to do with home improvement, yes. Anything to do with, let's say, near-term capex, and obviously the numbers are going to be 1 lakh crore for, let's say, February and March. That is the capex number if you have to achieve the 10 lakh crore figure for fiscal year 25, that budget. But mind you, the valuations which are getting captured for, let's say, FY26, and the numbers before the budget was anything like a 20% growth on top of 11 lakh crores last year, revised estimates of FY25. I mean, those things are not happening. So from that point of view, I mean, the infrastructure capex related over ownership, overvaluation has still room to correct. But home improvement and cement and tiles and the plyboards, furniture, and all of these things would come within the consumer discretionary space. Building materials, those would be standing to gain according to, because the valuations are extremely comfortable, and you are looking at a growth cycle as far as the building materials per se is concerned. So that would include even the paints. They have also not done well. Everything related to home improvement, because there is more money in the hands of the consumer, likely to do well.
Okay, Mr. Santhalia, great having you on a day like this, and getting that perspective. Always a pleasure. Thanks so much for coming in and speaking with us and being very patient because of the last minute cut-in that we had to do. But let's take a quick break on that note. On the other side, we'll get you top BTST ideas, and of course, we'll chat with guests because they've been waiting by as well. So stay tuned.
Another day, another bloodbath for the markets as the mid caps and small caps go into free fall. All indices in the red. Realty and media stocks drag down. The rupee record its largest surge in more than 2 years. The 84 paise spike is the currency's biggest jump since November 2022. Traders say the Reserve Bank of India stepped in to support the rupee. President Donald Trump halts prosecution under the Foreign Corrupt Practices Act of 1977. He says he wants to reduce enforcement on US companies. Six US congressmen write to the new Attorney General Pam Bondi demanding an investigation into the Department of Justice under Biden. Citing the Adani case, they write that DOJ under Biden had endangered the important equation between the US and India. It's an NDTV Impact story now. SEBI exposes LS Industries 5,500 crore valuation as stock scam. This is after NDTV Profit flagged how the company with almost negligible revenue had a valuation this huge. Prime Minister Narendra Modi visits France to co-chair the AI Action Summit with President Emmanuel Macron. His 3-day visit is expected to hold bilateral talks with and address business leaders. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, benchmark BSE Sensex was down 1.32% while Nifty declined on back of Trump's tariffs. All sectors were seen in red with media, auto, PSU, banks down almost 3%, dragging the markets lower. Harsh joins in with more details.
Second consecutive difficult day of trade that we've seen today. 1% shaved off the Nifty as well as the Sensex. 3% plus shaved off the Nifty mid-cap and the small-cap indices. So the pain in the broader market extremely real. We're now seeing 15 to 17% lower on the mid-cap and small-cap index. $11 billion worth of FI selling, really pressuring markets at this point. And essentially, that's the theme that's playing out because across the board, there is selling. The breadth is extremely weak for a second consecutive day. Now, it will be really important to understand how tomorrow plays out. But for the moment, let's break down today. Now, earnings, of course, in focus. Grasim did well on the back of that. And just about staying in the green is doing well in a market like this when the breadth is extremely bad. What didn't do well, some of the auto counters didn't do well, and Escorts and Aisha on the back again of numbers. Adani Enterprises was the top Nifty gainer, largely on the back of the fact that you had some bit of relief from the United States, likely impacting that counter. But outside of that, the breadth extremely weak. Less than 200 gainers to the 2,000 plus losers that we saw on the National Stock Exchange today. So the breadth extremely difficult and lots of stocks falling 3, 4, 5, 6, 7 and some even 8 and 9% lower on the back of pretty much no news. It's just the relentless selling that we've seen which is pressuring markets at this point. Let's talk about the sectors as well. Realty, second consecutive day where it's fallen 3% plus. The Nifty Bank outperforming the Nifty 50. I don't know how much that counts, but 1% lower versus the 1.3, 1.4% that the Nifty corrected today. And therefore, that bit of positivity. Outside of that, all sectors painted red. The VIX spiking by 3.5%. So all of that is what the market looked like. Last off, some names which were really flying around in trade. And some real buzzers, more on the downside than on the upside, very few on the upside. And that's the list of BSE 500 top gainers, top losers in front of you. Really not reading too much into them because that was just the way in which the day played out.
Right, Harsh. Thanks for that market check. Now, a significant portion of investments should be allocated to large cap funds to ensure consistent returns over time. This is what Sridhar Sivaram of Enam Holdings had to say, being bullish on large caps. He also said that 2025 could be a challenging year as markets may not yield positive returns. Listen in from his conversation earlier today with NDTV Profit.
If somebody asks me, I say you put it in a large cap mutual fund.
Yeah.
A large part of your flow should be in large caps. You can put a small percentage in small and mid cap because that's how returns will be over a long period of time. I think large cap looks reasonably good, and they should, over a period, they should mimic the returns that they've given over the last 5 years, 10 years. It's very difficult to predict 6 months, 1 year. We haven't had a negative year for what, 7 years now or 6 years? It's not a norm that every year you will get positive returns in the market. This is an exception. So it's easily possible that 25 is a negative year. I don't know, but I'm just saying that it's possible that 25 is a negative year. So be it. Over a period, this will happen. It is not a norm that every year markets have to give positive returns. That's not how it is.
The rupee jumps more since November 11, 2022 after strengthening to 87.48% dollar level yesterday. The rupee weakens 84 paise against US dollar. In the wake of sharp rupee depreciation in recent weeks, it appears that the RBI has decided to step in and take control of the volatility. My colleague Vishwanath Nair joins in now with more details.
So Tuesday saw the rupee recover sharply from its low levels of about 87.95 reported on the 10th of February to then end at about 86.83 against the dollar. If you were to take away the sudden appreciation on Tuesday, then the rupee weakness would have been about 2.7% since January 1. That would have made rupee the worst performing currency amongst the Asia Pac, ex-yuan and ex-yen. Now, it is interesting to note that after accounting for yesterday's sudden appreciation, the rupee weakness against the dollar stands at about 1.36%. That's a significantly better position for the rupee than what it used to be. Now, what traders are telling us is that because of the rapid depreciation of the rupee over the last couple of months, a lot of speculative positions were being built against the rupee. A lot of speculators believing that the rupee would hit 90 against the dollar very, very soon. The RBI in its intervention has communicated to the market that while rupee will depreciate, it will do so only in a slow and steady manner, and that the RBI will not tolerate any rapid depreciation of the rupee or any speculative pressure against the rupee. So that's what this sudden intervention and the sudden improvement in the rupee on Tuesday meant. Now, if you were to compare the rupee against some of the other large Asian currencies, the Taiwanese dollar has actually done better than the rupee, about 0.12% lower compared to the dollar. Thai baht has actually appreciated about 0.87%. The South Korean won again appreciated by about 1.8%. Indonesian rupiah down about 1.53. That's the only currency that has performed worse than the rupee, accounting for Tuesday's sudden improvement. Malaysian ringgit, of course, also appreciated about 0.5%. These are numbers, of course, year to date. So that is since January 1, how these individual currencies have performed against the dollar. And clearly the rupee currently is the second worst performing currency amongst all the other Asian currencies in the market.
Thanks, Vishy, for taking us through those details there. Now, in the short term, the rupee may gain, but in the long term, it's the inflation differential that matters. This is what CA Nageswaran had to say at the IVCA Conclave 2025 on the rupee depreciation. Listen in.
The rupee's annual depreciation was about 3%. And that is partly because, not partly, largely because India's inflation rate differential to the US was about 3%. So in the long run, and I mean, I was a teacher, before coming onto this job, I was a teacher also, and I used to tell my students, if you have to forecast exchange rates for about 3 years, the best thing to do is to open your wallet, pick up a coin, toss, and decide if head comes, currency depreciates, and if tail comes, currency appreciates, and you will be as successful as any forecaster. So when it comes to short horizons, up to 3 years, it is anybody's game. But in the long run, which is 5 years or beyond, it is ultimately boils down to inflation differential. So in that sense, as long as our inflation rate is 1% or 2% above the average inflation rates of developed countries or the US, to that extent the currency will depreciate. But the point is, this currency depreciation hasn't prevented India from delivering returns to investors, whether it is direct investors or portfolio investors or even PE VC investors. In the last 2 years, we have had tremendous exits, quite profitable ones, that attest to the strength of the depth of the capital market, options available for investors, and therefore the rupee depreciation is something that one can factor into investment decisions.
President Donald Trump has signed an executive order rolling back enforcement of a Foreign Corrupt Practices Act, or the FCPA. The act bars a company or person with US links to pay money or offer gifts to foreign officials as a way to win business overseas. Trump weighed trying to scrap the law during his first term. The fact sheet mentioned that US companies are harmed by FCPA over enforcement because they are prohibited from engaging in practices common among international competitors, creating an uneven playing field. In fact, we also spoke to a senior advocate of the Supreme Court, Gopal Jain, and market veteran Sunil Subramaniam on how the removal of FCPA is an important step before PM Modi's visit and how it will help American businesses. Listen in.
It's like a big package. Everything will get weaved in. And I think the key focus obviously seems to be to give a fillip to American businesses and remove this overhang which has been there. So it's send a positive sentiment. And I think in line with the new ethos and thinking, the revised guidelines will reflect that. So I think it will be a significant change from the existing framework and structure to the proposed new framework, structure, or guidelines that they will come up with. And I think, like we say in India, perhaps this is another facet of ease of business is what they have. And it will probably generate a lot more business in America. And two, the timing of the meeting of the two leaders is important. It will give them a chance to discuss a lot more without some of the thorny or tricky or prickly issues bothering them. So I think it also, in that sense, paves the way for much more constructive dialogue on the way forward for the two countries.
I would say that this clearly indicates that for Trump, more than being the president of the United States, he is acting like the chief business officer of the United States, right? So obviously in every decision, even if you look at it from the Trump tariff perspective, he has used the tariff to extract concessions for American businesses, to make America great again, American businesses great again. So this is another step there. And I think what this augurs will see, the US through this act was trying to behave like a moral god, that anywhere in the world a US company does anything corrupt, then they will be hauled up in the US. So I think obviously when they're competing with Japanese companies, Korean companies, European companies in the emerging market space, there are practices like this which are very often done. So I think that this gives a level playing field to American businesses. And I think the timing of it before Mr. Modi goes there is critical because, obviously he's seeking to promote American businesses in India. And locally, there are adjustments to be made. Now, obviously, this clears the path for more American businesses to operate in international economies and including in India. So I think the relevance in terms of timing is also very important. Then second, that it's also very clear that Trump is not going around doing soft power, right? He's not pussyfooting around it. He's there. He says, I will suspend this law. He's willing to use his executive powers to do that. So it clearly shows that he's a man of action. Now, some may like it, some may not like it. But at least you get the clarity that he's very firm on what he believes he will go and practice. So in that sense, he's a WYSIWYG. What you see is what you get. So to that extent, for the markets, right, this has been a big boost because every American company operating in India, they would always be thinking, no, somewhere some of their partners, right, they engage with subcontractors. Some subcontractor pays a bribe somewhere, that company will be hauled. Was an overhang which was probably a deterrent to American businesses going and competing in international spaces, including in India, and this will free up that. And
Now, in another significant development, 6 US congressmen on Monday wrote to a new Attorney General, Pam Bondi, and demanded a probe into the previous Department of Justice's indictment of Adani Group officials. We have Hiral on standby to offer more perspective on this. Take it away, Hiral.
a strongly worded letter to Attorney General Pam Bondi, the 6 US lawmakers, that's Lance Goodin, Pat Fallon, Mike, Brandon Gill, William Timmons and Brian Babin. They've said that the previous DOJ's action was a misguided crusade that came at the risk of harming America's relationship with a strategic geopolitical partner like India. Now, last year we know that the Adani Group had rejected as baseless the move by the Department of Justice under the Biden administration to name the conglomerate in a case of alleged wrongdoing. Now, what they have said is that there has been no compelling reason to pursue DOJ indictment against the Adani Group, and this is in a manner that could complicate relations with an ally like India unless some external factors were at play, is what they said. Moving on, they said that the questionable pursuit of an case against the Adani Group is an unwise decision by the Biden administration. Moving on, politically motivated decisions by agencies steered by the left-wing megadonors could quickly erode years of hard work and diplomacy. The other point is that the selective pursuit by Biden's DOJ needs a second look, and that's a strong statement to come in as well. What they've indicated is that despite knowing the possible outcomes of such a reckless decision, it requires a second look 100%. Moving on, investigate Biden DOJ's conduct and share all the records pertaining to this case is what the congressmen have asked. They've also said that the real reasons behind decision to indict Adani's could uncover whether Biden administration was compromised to outside entities. And the needless pursuit against those who have contributed tens of billions and created thousands of jobs will deter investors. What this means is that clearly, considering these factors and the lack of any real injury to US interest, the decision to pursue this indictment demonstrates more harm for America's interest than good, if any. In addition, what they've said is that Biden DOJ indictment indicted companies' executives without any real injury to US interests. Biden DOJ should have referred the case to Indian authorities, is what all the 6 of them have said in the letter that they've written to AG Pamela Bondi. Apart from that, the decision has actually gone ahead and jeopardized relationships with close allies like India, and they should have referred the case to Indian authorities. Addition to this, they've indicated that India is an important ally to the US for decades, and especially against the growing threat from China. US relationship with India is rare and has no congruent. If there is any fallout in relations with India, it could actually benefit adversaries like China, is what they have indicated. And the end culture of lawfare, opacity and privatization of DOJ as the law firm of the left is the comment that has come in from the US congressmen. Very lastly, they've said that they'd written to previously AG on the 7th of January and the 14th of January, but they did not receive any response. And they request them to investigate Biden DOJ's conduct and would appreciate them sharing with them all records which are pertaining to this case for a coordinated effort in uncovering the truth. So clearly, a call to investigate Biden's Department of Justice, the letter by US congressmen that has gone to them and has actually slammed Team Biden.
Thanks, Hiral, for taking us through those details there. Now, the Securities and Exchange Board of India has barred LS Industries, its promoter Profound Finance, and 4 other entities from the securities market. This was an effect of the company's stock price manipulation. The regulator first observed an article written on the website of NDTV Profit on February 3rd, flagging how a company with almost negligible revenue had a valuation of 5,500 crore rupees. My colleague Charu Singh joins in now with more details. Charu, over to you.
So the market regulator, Securities and Exchange Board of India, has come out with an order against Ellis Industries, which is a textile company, and its promoter entity as well as other key individuals within the company. The regulator mentioned in its order that it started its investigation after getting triggered through an article that was published on the website of NDTV Profit on 3rd Feb 2025. Now what happened here is that as a news organization we had flagged out that despite having no or zero negligible revenues for the past quarters, the company had a market valuation of over 5.5 thousand crore rupees. Now SEBI in its investigation found out that there are several loopholes and gaps in the disclosures made by the company. It found out that the information given to investors to make their decisions was false, and the valuations and the frequency with which the trades were carried out and the disclosure entities that were in a coordinated way related to the company were also having some shady transactions in relation to the trades that were being conducted, and that is why SEBI came out with an immediate order. However, a more formal and more detailed investigation will be carried out that has to be closed by May 15th this year.
Right, Charu. Thanks for bringing us those details there. Now it's day 2 of Aero India 2025, and we've been experiencing an enthralling display of innovation by defense companies. On the sidelines of the event, my colleague Sajit Mangat caught up with Munjal Shah of Paris Defense and Space Technologies and Sanjeev Singhal of Mazgon Dock on what the companies are planning in the aerospace sector. Now take a look.
Paris Defense today is offering the widest range of optical systems one can offer in the country for all platforms across all services. This is like a one-stop shop for any kind of optical systems that the country needs, which is like a big offering. You don't have anybody else in the entire show offering so much of variety, right from a very, very small 300 kilogram weight of optical payload for small drones to the largest, which will be probably weighing about 90 kilo for surveillance, up to 90 kilometers. So this is the biggest range we are offering and we are demonstrating here at the show.
Alpha, we have already delivered the first vessel in December last, and second delivery we are expecting sometime in April or maybe May, and then followed by third and fourth. So it is quite possible in FY26 we may deliver 2 of 17 Alpha. One is definite, and balance in FY27, the last one. And of course certain balance pending issues and the BND spares, they will spill over to 27-28.
So what is the kind of order book as of now, and where do you see the future order book coming in? What is the potential or prospective orders that are expected?
Yeah, right now we are having an order book of approximately 35,000 crores, 34,800 odd crores. And we are pretty confident with respect to the order being placed on Mazgon Dock Shipbuilders with respect to additional 3 submarines of Scorpion. The figures I would not be discussing here, but yes, it's a big order. And with respect to P75I, which is 6 submarines in which Mazgon Dock Shipbuilders is collaborating with ThyssenKrupp Germany. So this is definitely a huge order, and we are the only bidder who have been technically evaluated and found successful. The bids have been opened, so this process will also run. I expect during next 10 to 12 months, the order should be in place.
Now, beer prices in Telangana increased by 15% starting today as part of the government's new excise policy. India's top beer consuming state implements the revised prices to boost revenues from liquor sale. My colleague Uma Sudhir joins us with more details on this.
Beer is going to cost 15% more in Telangana, the largest beer consuming state in the country. Principal Secretary for Revenue for Prohibition and Excise, SAM Rizvi, issued the orders that the price of beer can be hiked by 15% from today onwards. This was on the recommendations of what is called the Fixing, a committee that was set up in July 2024, and it was headed by former retired Justice Jaiswal. last month, United Breweries, which in fact supplies 70% of the beer to Telangana, had stopped supplies, saying that the prices are not being increased by the state government from 2019-2020 onwards. And they also pointed out that they have huge dues from the state government. Subsequently, there were discussions that happened with the Telangana Beverage Corporation, which in fact has a monopoly for distribution of the alcoholic beverages in the state of Telangana. They had discussions with them, and following that they resumed the supplies, and now the Telangana government has increased the prices by 15%.
Prime Minister Narendra Modi today addressed a global AI summit organized in Paris. He spoke extensively about how artificial intelligence is playing a crucial role in daily lives of humans. While he advocated sharing the benefits of AI with all, especially the global south, he cautioned about the biases in artificial intelligence. PM Modi also spoke about the concerns of job losses due to AI and highlighted how this must be tackled. Trouble mounts for YouTuber and podcaster Ranveer Alabadia over his remarks on India's Got Latent. While the 31-year-old has apologized for his crass comments, the row surrounding his remarks is snowballing into a major crisis. In fact, in Mumbai, multiple complaints have been filed against Alabadia, who has 4.5 million followers on Instagram and 1.05 crore YouTube subscribers. Now, a parliamentary panel on information and technology is discussing whether to summon Alabadia. Well, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hand.
Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. Well, today we are talking about a chemicals company, which in fact caters to the consumption space, the FMCG space particularly, but it also has a specialty segment going in for it. And Galaxy Surfactants, that's what we are going to talk about today. And it's come up with earnings which have been a tad bit disappointing. But, let's talk about the company in general. Firstly, as I was mentioning, it does cater to the performance segment and the specialty segment. In the performance segment particularly, what we are seeing here is that it does cater to largely detergents and the many other factors that come into place. It is essentially the performance segment that drives volumes naturally because it is consumer facing and it's something that always has a lot more in terms of demand. And specialty segment, of course, is driven towards premium formulations. This is something that actually aids margins for the company going in. So these are the two major segments that we are keeping an eye on. Of course, in terms of the revenue split too, performance segment will contribute to about 60% of your overall revenues, where the specialty care segment contributes to about 40%. It does have, the specialty care segment particularly does have premium offerings like mild surfactants and conditioning agents, as well as products used for skin care and hair care. And when it comes to the performance segment, it's some mass market products like SLS and SLES for detergents and shampoos. So again, a very interesting chemicals company which is consumer facing, but it also has several others working in favor of the company. But as we always do, let's take a look at the internals of the company, the fundamentals of how things have fared for the particular company over the past few years. And that could perhaps give us a base of what we can expect as we move into the next set of few years. So, as usual, what we do, is we talk about, the income statement under these circumstances. We talk about the balance sheet, the cash flows, return ratios based on some of these income statements and the balance sheet. Of course, we move beyond the financial statements. We talk about the shareholding pattern, current valuations, and the management pedigree. That's the new aspect that we have added to this particular, this particular piece on the show, and of course the outlook for the company as well. But for all of this, I am also joined by Varsha Chandani. She is also going to help us, get into a lot more insight in terms of how the company has done over the course of the last few years. So Varsha, thank you for joining us. Let's start as usual by talking about the revenue. How has the growth been? How has the profitability come about?
Well, thank you, Agam, for that. So, if I were to talk about the income statement, the revenue for the last 3 years, if I were to see on a CAGR basis, it's been like 11%, and the 3-year net profit CAGR is actually 0. Now, there's a reason behind that. So, Galaxy has generally, they normally talk about the EBITDA per metric ton. So, they have generally exceeded or met its EBITDA per EBITDA guidance basically. But in FY20 and 22, the actual performance was at the upper end of the guidance. While in 21 and 23, if you see, the company went beyond its targets, and with 23 particularly benefiting from one-time export incentive. But however, if you see in 24, in FY24, the numbers doesn't look that good. The net profit in 23 was like 381 crore, which is down and in 24 it was almost 301 crore. Now, because the performance was close to the average of the guided range, given the challenges the company was facing when it comes to raw material volatility and market pressures. So not good when it comes to financial performance and specifically on the income statement side, and also in Q3 also the company did not do well because of the lower demand when it comes to their India segment, and even company was facing pricing issues, and also the volume growth has not been that good for the company. So overall, yeah, not good when it comes to income statement, Agam.
Yeah, sure. So again, this speaks, and it's a reflection of the volumes growth, but the management is still very sanguine in terms of how they can expect things to turn out. Of course, single-digit volume growth is what the management is looking at, and which at the size of which the company is currently, it could be a little bit of an underwhelming parameter there. But we'll talk about the balance sheet, and as far as the balance sheet is concerned, they're on a pretty stable footing. So firstly, they do have a reasonable amount of share net worth, but in terms of your long-term and short-term debt, it's not that much. In fact, a total of a little less than 100 crores in terms of your gross debt, and as against that, you have cash in bank standing at around nearly 200 crores. So it does seem like there's not much of a concern when it comes to balance sheet, which is why we'll give it a thumbs up. And again, it'll be curious to find as to how the accumulated cash and the accumulated profits of the company have panned out over or all the way until now. But since we've spoken about the income statement as well as the balance sheet, let's talk about the return ratios. Varsha, how are they looking at this point in time?
Well, Agam, if I were to compare this with 23, they are not actually great. So in FY23, the ROC was almost 24%. In FY24, it's 18%. While same goes with ROE also. It's in a downward trajectory. Now, the reason behind this is that, first of all, it is expected to expand in FY25, where it is expected, ROC is expected rather ROE is expected at 18% kind of and to sustain over the next year. Now, this is on the expectation side. But during FY23, why the return ratios are actually looking good? Because the company benefited from, export incentives. So, company benefited from a 6% export incentive realized in the Egypt business, and a shift in the product mix also led to the supernormal profitability. And that's the reason we even saw in FY23 the company had a good financial numbers, good revenue and EBITDA, and followed by profitability because of the 6% export incentive, which has actually led to good return ratios in FY23. But again, in FY24 the company did not meet the expectations when it comes to financial numbers, and that's the reason we are seeing the drag in FY24 return ratio. So overall, doesn't look good, Agam, considering the FY24 numbers.
Sure. So fair enough. Let's talk about the cash flows then. We were a little bit split whether or not we should, in fact, give it a thumbs up or no in terms of cash flows. In terms of the real picture, what we're seeing is that cash flows from operation is a strong 580 odd crores back in FY24. And it's usually been pretty decent, at least as far as cash flow from operations is concerned. It's also improving if you consider how things have panned out about, maybe 5 years down the line, 5 years ago, back in FY20, the same number was around 316. But it has had a positive net cash flow from operations for at least the last 10 years. On the other hand, when it comes to your net cash flows, well, that's been a little bit of an in and out number, at least over the last 5 years. But in the last 5 years, there's only been 2 years, of course, including the last year, where it's been a net outflow. And the outflow has not been considerable, which is why we thought that we'll give this a neutral rating and not necessarily a thumbs down. But on the other hand, we don't want to give it a thumbs up either, because at least on a net basis, while the company is putting in a lot of funds in investing, and while the company is putting in a lot of funds in financing activities, it does seem like it's not showing up in your statements, your financial statements, which is why we want to give this one a neutral rating as far as cash flows are concerned. Now, that's as far as your financial statements go. So overall, well, it's a mixed picture, and I reckon that the one feature that's working against the company is that while you do have a double-digit CAGR growth over the last few years, your profit hasn't really moved up, and that's because your margins have remained largely well, in the flattish range. But if you consider the shareholding, I want to talk about the shareholding. It seems pretty stable. So, well, we do have 71%, near 71% shareholding as far as promoters are concerned. FIIs and DIIs, we don't have too much of a change. It's the same for the others. Well, I do want to say that in terms of some of your key investors, you do have investors like Abu Dhabi Investment Authority as a part of the, shareholder base. And besides that, you also have some pretty crucial AMCs who have shareholding in the company. So you have Kotak, Axis, Nippon AMCs, along with ICICI Prudential AMCs, all have a shareholding in the company. So that, of course, is always a positive. It does bode well because you have a fairly wide investor base as far as institutions are concerned. But that said, Varsha, let's talk about valuations. How do they look?
Well, Agam, because the company in FY24 mainly, the company has not shown that kind of performance. The valuation, if I were to talk about the valuation considering the trailing 12 months, it's trading at about 27 PE. Now, we all know that the chemical industry is under pressure and it was expected to improve in H2 of this year, but we don't know because still there are concerns when it comes to more on the agri-chemical sides. But yeah, overall we are seeing the pressure in the chemical cycle. But if I were to talk about the peer valuation for this company, you have Aarti Surfactant, which is trading at 44 PE. Now there's a reason for that because the EPS or the profits for this particular company has gone down so drastically, but market is not discounting the share price of this company. This is the reason you're seeing this high PE for especially for Aarti Surfactant. But overall, if you see BASF India is trading at around 30 PE, Rosari is trading at around 29 PE. So on and all, it's because the company has not shown that much of growth, and this is the reason we are seeing a PE of 27 for Galaxy Surfactant. But if I were to talk about the historical PE for this company, it's been pretty in the range of, median PE pretty in the range of 30. So yeah, on and all a neutral kind of rating when it comes to valuation. But if the specialty portfolio for this company increases and if company shows the increase in the volume target or volume guidance, and if the India region, the demand in India region goes up, maybe the number will go up for this company, and maybe the market will give the premium valuation that the company deserves.
Right. And, as Varsha mentioned that, these valuations have come off. The only reason why we're giving the valuations a thumbs up is because it does seem like, it's cheaper as compared to some of its other peers. But also remember that some of its other peers are showing a slightly faster growth as compared to Galaxy Surfactants. That could also be the reason why it's going at a discount as compared to peers. But if you just compare the valuations on an absolute basis, well, this is the picture. But, Varsha, let's come in and talk about the management pedigree as well. What can you tell us about this one?
So, Agam, the good thing is the founders of this company have expertise in, chemicals, pharma and accounting, of course, the CFO kind of that. But overall, being a chemical company, the founders have expertise in chemicals and pharma. The CEO, that is K. Natarajan, has 25 years experience when it comes to, surfactant business, worked with major global clients, and the whole-time director, Mr. Kulkarni, is also a chemical engineer and ex-MD of Galaxy Egypt. Many leaders have, so overall if you see the many leaders who are running this company have chemical and technical expertise, and this leadership actually aligns with the operations and R&D. So overall when it comes to Agam management pedigree, I think good people are running the show, good people are running the company.
Well, absolutely, spot on. And finally, I'll just give you a very brief update on the outlook. Because we've in fact are talking to the management in just a few moments from now. Well, the focus will of course be on specialty care. We've had quarter and maybe the fourth quarter could see a little bit of a slowdown as far as your overall numbers are concerned, but the management is suggesting that Q1 FY26 onwards, there is bound to be a little bit of an improvement in demand coming in. They have launched a lot of products right now, and the free cash flows remain healthy with a steady capex. So while capex comes through, we also have free cash flows which continue to come through as well. And on that note, let's take a look at how all these parameters come together and the kind of rating that they throw up. So as far as the income statement, balance sheet, return ratios and cash flows are concerned, your key financial statements, it's a very, very mixed picture at the moment. And about one thumbs up on the balance sheet, as I was mentioning. Moving on to the next set of parameters, a few more thumbs up in general here. And that's perhaps the saving grace for this particular company, because the outlook does look good. Considering the positive outlook, the valuations do look reasonable. Well, the management pedigree and shareholding also inspire a lot of confidence in the company, which is why we've given it a thumbs up. And based on that, your overall rating comes to around 5.5 out of 8. But as I was mentioning, we were talking about the outlook going forward. So on that note, let's get the management to talk about it, where I asked the management, and I started by asking about the management about the current quarter, which has gone by, and how we can expect things to pan out over the course of the next couple of quarters. I spoke to Mr. K. Natarajan. This is what he had to say. Listen in.
What has happened in India in the last quarter, essentially was not something that the level to which it happened wasn't anticipated. All our customers also were talking about slowdown, but there's the extent to which it happened, and I think that was some surprise element. The reason that I am able to attribute is probably, I think, the consumer demand was expected to pick up during the festive season, and the pipeline was kept filled up with products. And I think as the months progressed, when that didn't happen, I think all the companies took the action to reduce the pipeline inventory, which caused a slowdown for almost all our customers in the quarter 3 of this financial year. As regards things getting better, we do see things getting better, probably not immediately in this quarter, but with what the government has announced in terms of putting more money in the hands of consumers to drive consumption, it would start showing results probably from the first quarter of the next financial year.
Okay, so you don't see that there's a structural change on the demand side and that these blips are temporary. Would that be safe to assume that?
Yes, I'm clear on that. This is just a blip, and it's not that it's happened in India for the first time. It's happened earlier as well. The India growth story is intact. There's a huge headroom for consumption to grow, and the government is doing all the right things to incentivize consumption. So yes, India should come back shortly into its growth trajectory.
Right, so can you tell me about the volumes growth for the quarter as well? And from what I understand, sir, you've you indicated for about 6 to 8% volumes growth. Do you still stand by it?
Yeah, from a midterm to long-term perspective, we stand by that. We will not be obviously meeting those targets of 6 to 8% in the coming year, because we just about 4% for the YTD 9 months. So we do expect that we'll close around slightly above 4% in terms of volume growth. But then we would probably wait for the next earnings call to be looking at whether we need to maintain the earlier guidance or we have reasons to revise it.
Right. So my next question is to do with your EBITDA per ton, which has also come off to a certain extent. And if I'm not mistaken, you guided for about 20,500 to 21,000. Is this small decline on account of operating leverage, that there's been a lack of demand and that would this eventually go up? Or do you think that there could be slackness for this particular variable as well going forward?
No, I think they should start getting to back to its the 20,500 base. There is a question of both operating leverage, as also in terms of certain...
We're going to discuss all of this and more on this episode. Joining me is Santosh Joseph, the founder of Germinate Investor Services. Santosh, thanks as always for taking the time. Let me start by asking, out of all of the people that you speak to, how many of them buy into this idea of an emergency fund, or do you have to convince them about it?
Hi, Alex. Good afternoon. Good to be back. There are a few people who are yet to come to terms with having an emergency corpus fund, though it may seem like a important decision that someone begins with. But it is also to do with some people didn't know that they needed to set aside money for emergency, because the traditional thought process is to have a fat savings bank account balance and not put a tag to it. But the minute someone like us goes into the room and tells them that it's nice to have a 6 months odd emergency saving corpus, many people immediately buy into the idea. And for most people, it's the 101 of beginning a journey of financial prudence. So therefore, some people need to be told, some people are ready with it, but the tag differs. But the people who are not aware of it, they are very eager and happy to start on this journey. And essentially, it is the first step towards getting yourself covered from financial prudence.
Okay, so you mentioned a 6-month amount, and we'll get to that in just a bit. But what kind of emergencies are you talking about? And here, I would like you to, and we're not trying to frighten anybody, we're trying to lay out possible scenarios so that they can guard against any eventualities that are not desirable. So what kind of scenarios are we talking about? We're talking about situations where you could lose your job or a health crisis, something like that, right?
You're right. So here, when we talk about an emergency corpus fund, we're essentially trying to solve for a financial emergency. Now, why does a financial emergency arise? It's one, a cutoff of income, or two, an unforeseen expense. Now, why is the cutoff of income happening? Primarily because A, maybe you lost your job completely out of the blue, or maybe you're not able to work. Could be an illness, could be an accident, or even could be a layoff that was unprecedented. Second, why do you need an emergency corpus fund? Assuming you're holding your job, assuming your income is intact, but suddenly you are hit with some financial expense which is outside your month-on-month planned expenditure. So it could come from two sources. One is cutoff of income or excess of expenses. In both the cases, it puts a stress on you if you do not have that approximate 6 months of savings, so that these kind of minor turbulences are mitigated.
Okay, so when you say 6 months of savings, what are you talking about? So 6 months of expenses, right, is generally what you cover. And so what do you include in those expenses? Do you include everything from your rent to your EMI to everything that you buy?
Okay, there are two ways to look at it. Either 6 months of essential expenses, or it could also be 6 months of your salary. Now, we are hoping that usually people save about 10% or 15% of their monthly salary. That turns out to be 80% either way. But it is a total expense list. Assuming that today you have to live your life normally, but you're not getting a salary, from rent to groceries to utilities to paying essentials to eating out to everything. And the more gross you make it and the more robust you make it, you're in a better shape. So therefore, 6 months of every essential expense that you need for the month would constitute the month into 6 months.
Okay, so here's the thing, right? A lot of people that I spoke to in the run-up to this conversation, Santosh, a lot of young people have said, we don't have that kind of money. It's not possible for us to put that amount of money aside. So just as an example, even if somebody is earning 50,000 rupees to start with, and it's such a good thing that the finance minister has ensured that these individuals will now not pay any tax. So that's a positive thing, and they'll be able to save more of their income. But even in that situation, you're talking about a situation where people are paying, 35,000 rupees on an average in expenses and everything that they have to spend on, right? So they have 15,000 rupees, but what do you do with that? You have various other things, other commitments, and so you're not really saving a lot. Even at your 10%, you're talking about 5,000 rupees per month. How are you going to do 35 into 6?
Alex, I'm glad you brought that up. It looks easy to save that 6 months corpus, but in practical application becomes a little more complicated. So there is a simple way. If you're only doing 5 or 10,000 in the example that you gave, it will take a couple of years before you hit that minimum threshold of 6 months. On the other hand, we prioritize this goal of having 6 months of savings. Basically, get done with it. Try and see as early as possible that you contribute, you accumulate, you spend less. Ensure your 6 months of saving basket or kitty is done. Because once you do that, after you're done, now you know you got an emergency kitty, you got a salary, and hopefully the salary is growing as you grow in your career. You will be a lot more comfortable to spend. Now remember, when you're doing this, the biggest thing that's going to come against you is all the choices of consumerism and all the 101 expenses that will lure you into. So therefore, it needs a little bit of extra discipline to just ensure that the threshold of the 6 months is done with. Believe me, it gives a lot of people a lot of peace and a good night's rest just by having that 6 months of safety net for you.
Okay, so would you say that if it's impossible at the start to have 6 months, that 3 months is enough? So because it's more practical, that's the only reason I'm asking, because the argument really is, can you tide over 3 months without really having access to income? Or, you know, the reason I'm asking this is that a lot of young people will say, if push comes to shove, I can go back to my parents, I can go back to my family, I can go back to my folks. So there's not as much pressure as you might have later on in life, Santosh. And so what I'm saying is, I'm saying have a practical solution to this.
No. So you're right, Alex. Not everybody's got the luxury of going back to parents or going back to friends to support them. We also have to acknowledge that today we're living in such interconnected world that many people are not even living in their own hometowns, and really they need
that 78 honorable members. 78 honorable members have spoken on this budget-related discussion. I'm very grateful.
Please, बैठे सीट पे. Please, बैठे सीट पे. No.
I'm very grateful, sir, that members have chosen to get into the details of the budget. Sir, actually, this budget has come at a time of immense uncertainties, and the change in the global macroeconomic environment makes it challenging. So, if there are challenges which have actually made the budget preparation with a lot more uncertainties, I have to at least put in front of the August House that there are issues which are of global concern, which also have an impact on our own budget making. There is a continuation of global conflict in the Middle East. Russia-Ukraine war continues. Stagnation in global GDP and sticky inflation in the emerging markets are all vitiating the atmosphere in the entire developing economies. Actually, what is happening is where we have ideally a situation which should encourage free trade, we are seeing more restriction. Where we very strongly vouch for globalization, we see a lot more fragmentation. Where we need fiscal prudence, we are seeing rising debt. Where we are seeing market forces which should actually play to make sure economies are going to be absolutely free and fair in its practices, we are seeing many restrictive industrial policies. We are also seeing that where multilateral forums should be playing a greater role, we are seeing bilateral partnerships and regional forums coming into play. So the world scenario in the last 10 years has actually turned almost 180 degrees, and as a result of which the challenges for any country in making their budget is far more complicated now rather than ever before. Now, as far as the first advanced estimates from NSO have come in, India's economy is expected to grow by 6.4% in real terms and by 9.7% in nominal terms. So during the current financial year, this is the picture which we want to present before you. The inflation trends, particularly food inflation, appears to be moderating. Sir, the union budget for 25-26 has sought to address these immediate challenges facing the domestic economy in the global context. It also rolls out futuristic path for transforming India into Vikasit Bharat. So our main goals in this budget, our main goals in this budget are to accelerate our growth, secure inclusive development, invigorate private sector investments, and uplift household sentiments. So, with a focus on Garib, youth, Annadata, and Nari, the budget likes to reveal new schemes and reforms in the following broad sectors: promotion of agriculture, MSMEs, investments and exports as growth engines, and building rural prosperity and resilience. We also want to have employment-led development, spurring domestic consumption and boosting manufacturing in India, including export promotion. Continuing public capital expenditure, sir, and rekindling the animal spirits in the private sector to step up investments. And most importantly, investing in people, investing in economy, and investing for innovation. These are actually the union budget. These are actually the points on which union budget is focusing, so that we balance the national development priorities with fiscal imperatives. So, some of the budgetary outlays I want to highlight here, sir, so that it covers most of the concerns expressed by many of the members. The budget, first thing before I even utter the outlays for each of the schemes, I want to highlight one concept, if you want to say, effective capital expenditure. What is effective capital expenditure, sir, and why do we need to? I'm sure very many members of Parliament will fully be aware of it, but for the records, I'd like to describe it for a minute. Effective capital expenditure includes core capital outlays and the grants and aid for creation of capital assets. Though the grants and aid for creation of capital assets, sir, is accounted in our budget, is accounted as revenue expenditure, they go for creating capital assets in the states. So we include them when we talk about effective capital expenditure. In the budget of this year, 25-26, the effective capital expenditure is projected at 15.48 lakh crores as against 13.18 lakh crores in the RE of 24-25. So the effective capital expenditure in BE 25-26, sir, is about 4.3% of our GDP. That is only 0.1% of GDP lower than the fiscal deficit of this year, which is 4.4. This year meaning 25-26, which is 4.4% of the GDP. So the effective capital expenditure is 4.3% of GDP. Fiscal deficit, 4.4% of GDP. What does it indicate? It indicates that government is using almost the entire borrowed resources for financing effective capital expenditure. So the borrowings are not going for revenue expenditure or committed expenditure or any of those kinds. It's going only for creating capital assets. So in effect, government intends to use about 99% of borrowed resources to finance effective capital expenditure in the upcoming 25-26 year. I'll explain it, Professor, please. I've just begun, right? The sectoral outlays in the year 25-26 include agriculture and allied activities, which get 1.71 lakh crores, rural development, which gets 2.67 lakh crores, urban development and transport, 6.45 lakh crores, health and education, 2.27 lakh crores, defense, which excludes defense pension, 4.92 lakh crores. So I just want to highlight the fact, sir, that money is not being denied to any of the capital expenditure accounts, because I heard occasionally this argument being put forward saying, has the paradigm shifted from capital expenditure because that gives a greater multiplier effect to giving people, the taxpayers, some money in their hands for boosting consumption? No, these data from the current budget, which is before us, shows that capital expenditure outlays have not come down at all. On the contrary, they've gone up. So in this, most importantly, across all schemes, I want to highlight how transfers to the states, that is for the year 25-26, will be 25.01 lakh crores. Transfers to the states across all schemes. And I just want to go back to listing out how much after COVID the capital expenditure is increasing. At the same time, including tax devolution, finance commission grants, and funds for centrally sponsored schemes, 50-year interest-free that we give for the states, all put together, the transfer of resources to the states is growing by the year. 2020-21, sir, 13.44 lakh crores, which is an increase from the previous year, that is 2019-20, where it was 13.19 crores. 21-22, it rose to 13.40 lakh crores. It was 4,000 slightly less because of COVID-related issues, although we targeted a higher number. But in 22-23, it was 15.56 lakh crores, which is 2.16 lakh crores more than the previous years. And that is the year when we brought in the 50-year interest-free loans for states. Interest-free 50-year loans. 23-24, 17.98 lakh crores, which is again 2.42 lakhs crore more from the previous year. 24-25, 22.91 lakh crores, 4.93 lakh crores more. And this year, the budget which is before us, 25.01 lakh crores, which is 2.1 lakh crores more than the previous year. So the amounts going to the states have not come down at all. Sir, I will seek your indulgence, sir. I want to highlight the thought and the philosophy behind our government's budget-making processes, and also how in the last 5-6 years we have set clearly some practices which are, I would think, very important from the point of view of fiscal management. So allow me to just go through some of the points. It's been a conscious policy choice because it's part of our governance priorities, its commitment to fiscal discipline. So India's development story actually presents a stark tale of two opposite approach to budget making and also for fiscal prudence. So global financial crisis of 2008, once in a century 2020 COVID pandemic. But what happened after 2008 led us to become a fragile country, whereas what is now happening is that you see we continue to remain the fastest growing economy. I want to highlight some of the very critical steps that we have taken in the fiscal prudence approach and also in budget making. So under this government, sir, India transited from the league of fragile five to become one of the top 5 economies of the world. 2021, sir, we had the devastating pandemic. Union budgeting reveals recurrent themes of transparency. Since that year, you will find our themes which are recurring are transparency in the budget making and also credibility of budget making, reforms to catalyze growth, targeted social security, and use of technology for obtaining value for public money. I'll just give 2 examples or sometime even 1 example for each year. 2020-21, sir, we took a giant step of bringing on board the FCI off-budget borrowing of 1.2 lakh crores. Food Corporation of India had continuously maintained off-budget borrowings. That year, we took a major step of bringing all the off-budget borrowings of FCI, which totaled to 1.2 lakh crores onto the budget. So that enabled better public understanding and discourse on government debt, and also brought in a sense of credibility to the budget documentation itself. That year, another step, sir, we have also partnered with the states to deepen the multiplier effect on capital spending by providing them with the 50-year interest-free loan. From an allocation of 12,000 crore in 2021, it has now in the current budget reached 1.50 lakh crores. So it is not just us believing in multiplier effect by spending on capital asset building, but we have partnered with the states, and states are really actually speedily coming up with a lot of proposals, which is very, very good, and we are able to give them that kind of money to support their proposals. 21-22, sir, the year after that, again 2 steps which I want to highlight. Mahua, Ministry of Housing and Urban Affairs, off-budget borrowing was also taken on board. We brought on record the off-budget borrowing of urban housing of 33,000 crores on the books of government by prepaying it. By prepaying it, sir. So we bought it on books and we prepaid it, and that's a major initiative that we've taken to make sure the budget's transparency and nothing outside of the budget will be done. That was the second major step. The first year it was FCI, the second year it is Mahua's. That year, again, just-in-time release and transparency in flow of funds to the states, the single nodal agency model was introduced, so taxpayer money goes to the states just in time for them to use the money, and there is no difficulty in that kind of a quick disbursal of resources. That's the second major step for 21-22. 22-23, sir, debt consolidation of agencies for better fiscal planning on borrowings. Professor was very worried about the borrowing, the debt, and everything else. This is one of the points which I want Professor to consider as to why consistently between 2021 we are taking measures to reduce debt, at the same time make public money go for productive asset building activities. We commenced financing of capital outlay of railways and highways from the union budget that time, 22-23. This allowed for debt consolidation, particularly railways debt consolidation began happening from that year of these agencies and helped lower cost of borrowing. So as borrowing by government is cheaper than borrowing by agencies, so efficient use of money, there also we have shown that this kind of a step can actually better utilize taxpayers' money.
regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
देश बनाए, क्लियर ग्लास ऐसे जो दुनिया दिखाए, मिरर ऐसे जो सपने दिखाए, रिफ्लेक्टिव ग्लास ऐसे जो धूप से बचाए और बनाए घर ऐसे जो परिवार बसाए। अपना देश।
Another day, another bloodbath for the markets as the mid caps and small caps go into free fall. All indices in the red. Realty and media stocks dragged down. The rupee recorded its largest surge in more than 2 years. The 84 paise spike is the currency's biggest jump since November 2022. Traders say the Reserve Bank of India stepped in to support the rupee. President Donald Trump halts prosecution under the Foreign Corrupt Practices Act of 1977. He says he wants to reduce enforcement on US companies. Six US congressmen write to the new Attorney General Pam Bondi demanding an investigation into the Department of Justice under Biden. Citing the Adani case, they write that DOJ under Biden had endangered the important equation between the US and India. It's an NDTV Impact story now. SEBI exposes LS Industries 5,500 crore valuation as stock scam. This is after NDTV Profit flagged how the company with almost negligible revenue had a valuation this huge. Prime Minister Narendra Modi visits France to co-chair the AI Action Summit with President Emmanuel Macron. His 3-day visit is expected to hold bilateral talks with and address business leaders. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, benchmark BSE Sensex was down 1.32% while Nifty declined on back of Trump's tariffs. All sectors were seen in red with media, auto, PSU, banks down almost 3%, dragging the markets lower. Harsh joins in with more details.
Second consecutive difficult day of trade that we've seen today. 1% shaved off the Nifty as well as the Sensex. 3% plus shaved off the Nifty mid-cap and the small-cap indices. So the pain in the broader market extremely real. We're now seeing 15 to 17% lower on the mid-cap and small-cap index. $11 billion worth of FI selling, really pressuring markets at this point. And essentially, that's the theme that's playing out because across the board, there is selling. The breadth is extremely weak for a second consecutive day. Now, it will be really important to understand how tomorrow plays out. But for the moment, let's break down today. Now, earnings, of course, in focus. Grasim did well on the back of that. And just about staying in the green is doing well in a market like this when the breadth is extremely bad. What didn't do well, some of the auto counters didn't do well, and Escorts and Aisha on the back again of numbers. Adani Enterprises was the top Nifty gainer, largely on the back of the fact that you had some bit of relief from the United States, likely impacting that counter. But outside of that, the breadth extremely weak. Less than 200 gainers to the 2,000 plus losers that we saw on the National Stock Exchange today. So the breadth extremely difficult and lots of stocks falling 3, 4, 5, 6, 7 and some even 8 and 9% lower on the back of pretty much no news. It's just the relentless selling that we've seen which is pressuring markets at this point. Let's talk about the sectors as well. Realty, second consecutive day where it's fallen 3% plus. The Nifty Bank outperforming the Nifty 50. I don't know how much that counts, but 1% lower versus the 1.3, 1.4% that the Nifty corrected today. And therefore, that bit of positivity. Outside of that, all sectors painted red. The VIX spiking by 3.5%. So all of that is what the market looked like. Last off, some names which were really flying around in trade. And some real buzzers, more on the downside than on the upside, very few on the upside. And that's the list of BSE 500 top gainers, top losers in front of you. Really not reading too much into them because that was just the way in which the day played out.
Right, Harsh. Thanks for that market check. Now, a significant portion of investments should be allocated to large cap funds to ensure consistent returns over time. This is what Sridhar Sivaram of Enam Holdings had to say, being bullish on large caps. He also said that 2025 could be a challenging year as markets may not yield positive returns. Listen in from his conversation earlier today with NDTV Profit.
If somebody asks me, I say you put it in a large cap mutual fund.
Yeah.
A large part of your flow should be in large caps. You can put a small percentage in small and mid cap because that's how returns will be over a long period of time. I think large cap looks reasonably good. And they should, over a period, they should mimic the returns that they've given over the last 5 years, 10 years. It's very difficult to predict 6 months, 1 year. We haven't had a negative year for what, 7 years now or 6 years? It's not a norm that every year you will get positive returns in the market. This is an exception. So it's easily possible that 25 is a negative year. I don't know, but I'm just saying that it's possible that 25 is a negative year. So be it. Over a period, this will happen. It is not a norm that every year markets have to give positive returns. That's not how it is.
The rupee jumps more since November 11, 2022 after strengthening to 87.48% dollar level yesterday. The rupee weakens 84 paise against US dollar. In the wake of sharp rupee depreciation in recent weeks, it appears that the RBI has decided to step in and take control of the volatility. My colleague Vishwanath Nair joins in now with more details.
So Tuesday saw the rupee recover sharply from its low levels of about 87.95 reported on the 10th of February to then end at about 86.83 against the dollar. If you were to take away the sudden appreciation on Tuesday, then the rupee weakness would have been about 2.7% since January 1. That would have made rupee the worst performing currency amongst the Asia Pac, ex-yuan and ex-yen. Now, it is interesting to note that after accounting for yesterday's sudden appreciation, the rupee weakness against the dollar stands at about 1.36%. That's a significantly better position for the rupee than what it used to be. Now, what traders are telling us is that because of the rapid depreciation of the rupee over the last couple of months, a lot of speculative positions were being built against the rupee. A lot of speculators believing that the rupee would hit 90 against the dollar very, very soon. The RBI in its intervention has communicated to the market that while rupee will depreciate, it will do so only in a slow and steady manner, and that the RBI will not tolerate any rapid depreciation of the rupee or any speculative pressure against the rupee. So that's what this sudden intervention and the sudden improvement in the rupee on Tuesday meant. Now, if you were to compare the rupee against some of the other large Asian currencies, the Taiwanese dollar has actually done better than the rupee, about 0.12% lower compared to the dollar. Thai baht has actually appreciated about 0.87%. The South Korean won again appreciated by about 1.8%. Indonesian rupiah down about 1.53. That's the only currency that has performed worse than the rupee, accounting for Tuesday's sudden improvement. Malaysian ringgit, of course, also appreciated about 0.5%. These are numbers, of course, year to date. So that is since January 1, how these individual currencies have performed against the dollar. And clearly the rupee currently is the second worst performing currency amongst all the other Asian currencies in the market.
Thanks, Vishy, for taking us through those details there. Now, in the short term, the rupee may gain, but in the long term, it's the inflation differential that matters. This is what CA Nageswaran had to say at the IVCA Conclave 2025 on the rupee depreciation. Listen in.
The rupee's annual depreciation was about 3%. And that is partly because, not partly, largely because India's inflation rate differential to the US was about 3%. So in the long run, and I mean, I was a teacher, before coming onto the job, I was a teacher also, and I used to tell my students, if you have to forecast exchange rates for about 3 years, the best thing to do is to open your wallet, pick up a coin, toss, and decide if head comes, currency depreciates, and if tail comes, currency appreciates, and you will be as successful as any forecaster. So when it comes to short horizons, up to 3 years, it is anybody's game. But in the long run, which is 5 years or beyond, it is ultimately boils down to inflation differential. So in that sense, as long as our inflation rate is 1% or 2% above the average inflation rates of developed countries or the US, to that extent the currency will depreciate. But the point is, this currency depreciation hasn't prevented India from delivering returns to investors, whether it is direct investors or portfolio investors or even PE, VC investors. In the last 2 years, we have had tremendous exits, quite profitable ones, that attest to the strength of the depth of the capital market, options available for investors, and therefore the rupee depreciation is something that one can factor into investment decisions.
President Donald Trump has signed an executive order rolling back enforcement of a Foreign Corrupt Practices Act, or the FCPA. The act bars a company or person with US links to pay money or offer gifts to foreign officials as a way to win business overseas. Trump weighed trying to scrap the law during his first term. The fact sheet mentioned that US companies are harmed by FCPA over enforcement because they are prohibited from engaging in practices common among international competitors, creating an uneven playing field. In fact, we also spoke to a senior advocate of the Supreme Court, Gopal Jain, and market veteran Sunil Subramaniam on how the removal of FCPA is an important step before PM Modi's visit and how it will help American businesses. Listen in.
It's like a big package. Everything will get weaved in. And I think the key focus obviously seems to be to give a fillip to American businesses and remove this overhang which has been there. So it sent a positive sentiment, and I think in line with the new ethos and thinking, the revised guidelines will reflect that. So I think it will be a significant change from the existing framework and structure to the proposed new framework, structure, or guidelines that they will come up with. And I think, like we say in India, perhaps this is another facet of ease of business is what they have, and it will probably generate a lot more business in America. And two, the timing of the meeting of the two leaders is important. It'll give them a chance to discuss a lot more without some of the thorny or tricky or prickly issues bothering them. So I think it also, in that sense, paves the way for much more constructive dialogue on the way forward for the two countries.
I would say that this clearly indicates that for Trump, more than being the president of the United States, he is acting like the chief business officer of the United States, right? So obviously in every decision, even if you look at it from the Trump tariff perspective, he's used the tariff to extract concessions for American businesses, to make America great again, American businesses great again. So this is another step there. And I think what this augurs well, see, the US through this act was trying to behave like a moral god, that anywhere in the world a US company does anything corrupt, then they will be hauled up in the US. So I think obviously when they're competing with Japanese companies, Korean companies, European companies in the emerging market space, there are practices like this which are very often done. So I think that this gives a level playing field to American businesses. And I think the timing of it before Mr. Modi goes there is critical because, obviously he's seeking to promote American businesses in India. And locally, there are adjustments to be made. Now, obviously, this clears the path for more American businesses to operate in international economies and including in India. So I think the relevance in terms of timing is also very important. Then second, that it's also very clear that Trump is not going around doing soft power, right? He's not pussyfooting around it. He's there. He says, I will suspend this law. He's willing to use his executive powers to do that. So it clearly shows that he's a man of action. Now, some may like it, some may not like it. But at least you get the clarity that he's very firm on what he believes. He'll go and practice. So in that sense, he's a WYSIWYG. What you see is what you get. So to that extent, for the markets, right, this has been a big boost because every American company operating in India, they would always be thinking, no, somewhere some of their partners, right, they engage with subcontractors. Some subcontractor pays a bribe somewhere, that company will be hauled. Was an overhang which was probably a deterrent to American businesses going and competing in international spaces, including in India, and this will free up that. And
Now, in another significant development, 6 US congressmen on Monday wrote to a new Attorney General, Pam Bondi, and demanded a probe into the previous Department of Justice's indictment of Adani Group officials. We have Hiral on standby to offer more perspective on this. Take it away, Hiral.
A strongly worded letter to Attorney General Pam Bondi, the 6 US lawmakers, that's Lance Goodin, Pat Fallon, Mike, Brandon Gill, William Timmons and Brian Babin. They've said that the previous DOJ's action was a misguided crusade that came at the risk of harming America's relationship with a strategic geopolitical partner like India. Now, last year we know that the Adani Group had rejected as baseless the move by the Department of Justice under the Biden administration to name the conglomerate in a case of alleged wrongdoing. Now, what they have said is that there has been no compelling reason to pursue DOJ indictment against the Adani Group, and this is in a manner that could complicate relations with an ally like India unless some external factors were at play, is what they said. Suit of a case against the Adani Group is an unwise decision by the Biden administration. Moving on. Politically motivated decisions by agencies steered by the left-wing megadonors could quickly erode years of hard work and diplomacy. The other point is that the selective pursuit by Biden's DOJ needs a second look, and that's a strong statement to come in as well. What they've indicated is that despite knowing the possible outcomes of such a reckless decision, it requires a second look 100%. moving on, investigate Biden DOJ's conduct and share all the records pertaining to this case is what the congressmen have asked. They've also said that the real reasons behind decision to indict Adani's could uncover whether Biden administration was compromised to outside entities. And the needless pursuit against those who have contributed tens of billions and created thousands of jobs will deter investors. What this means is that clearly, considering these factors and the lack of any real injury to US interest, the decision to pursue this indictment demonstrates more harm for America's interest than good, if any. In addition, what they've said is that Biden DOJ indictment indicted companies' executives without any real injury to US interests. Biden DOJ should have referred the case to Indian authorities, is what all the 6 of them have said in the letter that they've written to AG.
Rural development have increased from 4.16 lakh crore to 5.54 lakh crores between 2021 to 25-26. So there is no cut in any of these. Repeatedly we have people asking questions. It's okay to ask questions, but I'm giving you the answer that nothing has come down there. So fiscal consolidation was another issue on which many members were worried, saying, is it being done at the cost of public spending and social sector spending? Education budget reduced, PM Poshan, Jal Jeevan Mission, Aabas Yojana have all of them come down, post-metric scholarships. I like to answer all of them, sir. Social welfare, the budget has increased from 56,501 crore in 24-25 to 60,052 crore in 25-26, not gone down from 56 to 60. I'll come. Education, sir. Education, sir. 1.26 lakh crore in 24-25 has gone to 1.29 lakh crore in 25-26. Education का भी कम नहीं हुआ, ऊपर से ज़्यादा हुआ. Health, 89,287 crores in 24-25 has gone to 98,311 crore in 25-26. Sir, I like to highlight one point at this time. Again, substantive, budgetary, technicality, but it's important because technology which has been adopted for budget and budget management has today given all of us the advantage of getting facts by looking at the portal or by looking at the documents. Nothing can be hidden in this day and age because of technology. And therefore, I'd like to draw the attention of the honorable members for a statement which has been provided called expenditure profile. It's a statement 4AA. I want to show how unspent balances are remaining and how much is it totaling to unspent balances? 1 lakh crore as of 31st December 2024. How unspent balances are remaining, and for us to see it, sir, the expenditure profile statement. This is along with the budget, it's been already presented. 1,395.45 crores is lying either in the SNA account or in the treasury or in an escrow account in the states. In the states. 1,395.45 Rashtriya Krishi Vikas Yojana. On that head of account, this much money is lying there yet to be utilized. 4,636.55 crores is lying in the states, assistance to state agencies for intrastate movement of food grains and the FPS dealers margin under NFSA. National Food Security Act. Many honorable members are really concerned, and I can understand the concern. But if money is lying in the accounts, If you just give the utilization or raise the bills, you get the money. It is in your account there, SNA account there. Please take it. It's already in your account. But no, you're not giving money for Food Security Act. Why not? We are giving the money. It's there. Would you like to use it? This is a statement attached to the budget documents. I would like the honorable members to see where the money is lying. And despite that, more is being asked. You ask more, no problem. The moment you use this, we'll give more. The next, Samagra Shiksha. 11,516 is lying there in the states. Would you please use it? There was a lot of concern on portion. PM Pradhan Mantri Poshan Shakti Nirman, erstwhile national program for midday meal in schools. 5,205 crores are lying in the state accounts. And this is for Poshan Abhiyan. And here I hear voices. प्रधानमंत्री जी, बच्चों का न्यूट्रिशन के ऊपर आपको कोई ध्यान नहीं है क्या? अरे पैसा आपके अकाउंट में है भाई, यूटिलाइज करो. हमने तो दे दिया पैसा, आप क्यों नहीं यूटिलाइज कर रहे हो? मुझसे पहले हमें क्यों पूछ रहे हैं? So, go use it. This document is available. Have a look at it if I'm saying anything abrupt. So next, sir. These are not chota-mota amounts. These are big amounts. I want to ask question therefore. Sir, flexible pool for RCH and health system. Sir, I've heard health minister Jagat Prakash Nadda ji. No, you can always ask me, Supriya ji, all the questions, but I've heard you all. I want to come up with my answer. Please have patience, and you may ask me again. But if I'm telling you anything that which is not already available with you, I'll be ready to answer. But it is that what proof a budget document by? Ay, Bhagwan. Budget document hai bhai. Sir, flexible pool for RCH health system strengthening, National Health Program and National Urban Health Mission. How much is left in the accounts? 2,988 crores lying with the states.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education
will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
All they're looking at, how to sort of reduce the number of slabs which is there in custom, which is like 12 or 13 slab, and how to bring it down to 5 or 6.
As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate.
देश का 55% एक्सप्रेसवे उत्तर प्रदेश के पास होगा। सबसे अधिक रेलवे नेटवर्क वाला प्रदेश उत्तर प्रदेश, सबसे ज्यादा एयरपोर्ट वाला प्रदेश उत्तर प्रदेश, सबसे ज्यादा मेट्रो संचालित करने वाला प्रदेश उत्तर प्रदेश।
And soon, UP will be the first state with 21 airports, 5 international and 16 domestic, taking air connectivity to new heights. From roads to runways, UP is building a future of seamless travel.
Are your small and mid-cap investments safe? That's the big question we're talking about today. Welcome to the show. I'm Tamanna Inamdar. One of India's most seasoned fund managers, ICICI Prudential CIO S. Naren, at an event recently has issued a warning so blunt, it's almost unheard of in the investment world. His exact words, among many, we think it is a clear time to take out lock, stock and barrel from small and mid caps. S. Narain called the coming decade the most dangerous after 2007-8, and he categorically stated that unless you are planning to stay invested in the mid and small cap space for 20 years, take your money out, adding that the outlook for SIPs starting 2023 onwards is very bad unless they're 20-year SIPs. Now, this is particularly worrisome, considering the total share of inflows into small and mid-cap schemes was 40% in 2023 in mutual funds. Here's Narain's argument. He says that banks are taking minimal risk in terms of giving loans to mid and small caps, so these firms are coming to the market with QIPs and other offerings and raising money from the retail investor. And Narain says all the risk is being borne by investors like you. I don't think either investors or wealth managers have fully realized this yet. So now, fund managers rarely say stuff like this openly. Their job is to attract investors to put in money in their funds, not advise them to pull it out. And yet Narain isn't mincing his words. He says even SIPs are not foolproof as investments, stressing that their success depends on market conditions. Now, why are we talking about S. Narain's comments today? Because, and not only because of, but since those comments, we have seen a steep correction in both small and mid-cap indices in the equity markets. Overall, of course, you have seen markets on a downward trend. 75 of 150 mid-caps have fallen over 20% from their highs. 22 of 150 mid-caps have plummeted over 30% from their highs. Small caps are in even deeper trouble. 121 of 250 small caps have fallen over 20% from their highs, and 51 of 250 small caps have erased more than 30% from their value. And if that wasn't enough, every single mid-cap and small-cap fund has given negative returns since September 2024, which is why the question we're asking today is, what do you do with your investments in this space? Before we get to our panel on it, let's listen in to some of S. Narain's comments.
Small cap and mid cap is something which is absolutely absurd on the market cap side, but is the chances of a bad return in SIPs is also very, very high at this point of time. Today on momentum indicators also, both mid cap and small cap are broken completely and decisively at this point of time. Small cap and mid cap is something which is absolutely absurd on the market cap side. In 2013-14, it was very, very cheap. And from 2013-14, it has gone to extremely absurd level on market cap side. Okay, we said, are we looking at it wrongly? Because after all, India is growing. So mid cap, small cap will keep growing. Then we looked at median PE. We found that we looked at median PE as a model. When we looked at median PE as a model, we found that the median PE of mid-cap has touched 43 and the median PE of small cap has reached 43. Again absurd at this point of time compared to what it used to be. And then we looked at what is the entire PAT contribution versus the market cap on small mid. That again shows that small mid, the market cap contribution is much higher than the PAT contribution. Okay, so there were people who said, you are looking only at valuation. Is momentum changing? So we started to look at mid-cap momentum over Nifty. Even on mid-cap momentum over Nifty, we have a situation where the momentum has started to weaken and it has cut its DMA. I'm not the expert on momentum, so I went to one of my colleagues who is a very good quality momentum person. He says that you are very early, but now the momentum is cut. So on momentum also now mid-cap is cut. And similarly on momentum also small cap is cut. These things have happened in the last one month or so, that today on momentum indicators also, both mid-cap and small cap are broken completely and decisively at this point of time. So the chances of medium-term returns in SIPs are likely to be low. If you're going to do a 20-year SIP from 2025 to 2045, will it be low? Answer is no. But is the chances of a bad return in SIPs is also very, very high at this point of time. Particularly SIPs which have started after 2023 or so, I think the chances of them which have started from 2023, I think the outlook for those SIPs look pretty bad unless they are going to be 20-year SIPs. My own view. Clearly hybrid. I think hybrid schemes are absolutely attractive at this point of time, depending on how positive you are on the market. If you are very positive on the market, it would be equity and debt. If you are less positive, it would be multi-asset, particularly if you like gold. If you are slightly even less positive, it is multi-asset allocator and balanced advantage. If you are negative, it is equity savings. Clearly, that would be one area very clearly. On market capitalization, FIs have just sold so aggressively at this point of time that we are very, very clearly in favor of funds which invest in mega caps like minimum variance fund.
All right, to take this conversation forward, I'm joined today by Ashish Somaiya, CEO, White Oak Capital AMC, Mihir Vora, CIO of Trust Mutual Fund with us, in fact, in the Mumbai studios, Feroz Aziz, Deputy CEO, Anand Rathi Wealth, also joining in. Welcome to all of you and thank you so much for speaking with us. Now, I know some of you or maybe all of you are not going to be wanting to comment on someone else's comment. So let me get that straight out of the way. This is not standing in judgment of whether what S. Naren said was correct, not correct. This is a question right now in everyone's mind, and which is what we must address. So with that context, let me come to you first, Ashish Somaiya. Was it not refreshing, in a way, to hear someone speak completely unfiltered about information that doesn't get out there to the average investor?
Yes, certainly it is refreshing. You know, one of the most, respected voices in the industry, spelling aloud his thoughts. It is refreshing to hear a comment like that. But a couple of things I want to tell you, if you see small cap as a space, it is known for volatility. So let me just recount, some simple data to you. A few years back, say January 2018, small cap made a peak. And then, it was one way down till April 2020. And then October 2021, again, we made a new peak in small cap. And then it was one way down till March 2023. And then, recently we made a peak in 2024. So here I've given you 3 to 4 examples. And what I have seen in my own, 25 years in the industry, I've seen that in any given 5-year time frame, it's not unusual for small cap indices to show volatility and fall 30-40%, and then eventually also make a new high, right? So that's the feature. It's not a bug. That is how it has always behaved. The second important thing is, at least me, for example, or my firm, we actually don't even have a small cap fund, right? But let me just clarify to you, none of us advocates investing in small cap with the assumption top down that small cap will outperform large cap. But yes, our portfolios do have small cap investment for a simple reason that it's the most heterogeneous space in the market. If you look at large cap, you have HPBP IOC, you have TCS Infosys, you have the big banks, you have energy, you have oil, you have utilities.
IT, too much of banking, too much of IT.
It's all, so what I'm saying is it's all macro policy driven. It's all homogeneous. I can't generate alpha just by buying all of that. We need small caps because that's the heterogeneous space. That's where the rising sectors are, and that's where we generate alpha. So that is our case, right? And I think, small cap exposure is needed to generate alpha. That's where I will leave it. And it's known to be a volatile space. I mean, there's nothing new which is happening right now.
No, but what is new is the comments. What is new is the comments, and what is new is the way the market has reacted. Yes, small caps are riskier. Yes, small caps generate alpha. For those of you wondering, what do we mean? If you want super normative or really, robust returns, you look at small caps. And if you compare what small cap funds have been given versus large cap funds in the last 2-year bucket, you will see why there's so much of inflow going into small cap funds. versus large cap funds, or small and mid versus large caps. Mihir, in fact, the flavor of 2024 was thematic funds. So that's what the mutual fund industry does. It sees where the money is coming and you have products accordingly. But what we're hearing from S. Naren, a warning bell, because he's saying that there are a lot of fund managers who have not seen a bearish market for a while. They don't know how to deal with it. The people handling the money day to day are also not aware of what to do when the tide turns, and the tide seems to be turning.
Sure. So first of all, I don't know how to slice and dice this, but the point is that fund managers may or may not have the experience, but fund houses do, right? And mutual funds are such a well-regulated product, such a transparent product, that you are just trying to generate alpha versus the benchmark. So you can't be too far away. Of course, you can be if you take larger than life bets. But given the way that processes, systems, and SEBI has been tightening the mutual fund industry, there is not a chance that you can be completely way off the benchmark for a prolonged period of time. So ultimately, it's a question of asset allocation, right? What returns the particular asset class will give, whether it's equity versus fixed income, or within equities, large, mid, small, thematic, etc. So, let's get the debate out of the way that fund managers can mess it up completely by not taking a call, because the asset allocation call is done by the investor or the distributor or the advisor.
No. So what is the debate? So you're saying it's not the fund manager's fault?
No.
Or responsibility?
The fund manager's job is to invest as per the mandate, right? So if he's getting money in a large cap fund, he obviously has to have 65% in a large cap mandate, right? If it's getting money in a small cap fund, he has to put money in a small cap fund. The point is, the advisor or the investor has to take the call, and of course you can check with the fund manager what the preferences are. That's a different debate altogether. But as an asset class, you need to invest in the relevant category. I think that's where the debate is. Now, if somebody is giving his view, that's a call that one needs to take. But as an investor, ultimately it's your call or your advisor's call.
Okay, maybe that's a careful answer. I appreciate how careful you are with this answer, but I'm going to ask you straight up. If I put in a small cap fund in 2023, do I have to wait 20 years for positive returns? That's what one of a very respected voice in the industry is saying. Frankly, that's the fear on the street right now, and I think we should address it heads up.
Sure. I mean, I don't want to comment on the comments as you mentioned in the beginning, but if you were to go by history of the Indian markets, whether it's the large cap index or the small cap index, 10-year rolling returns for most of the indices have never been 2 less or never been 0, right? The point is, if you hold for a period of which is 10 years or more, then the probability of losing money is really less. And that's what the statistics tell you. Now, you can slice and dice it either way. I talked about rolling returns, which is a point-to-point lump sum investment. The returns for SIPs are even better. So if you look at a 10-year SIP for a large cap fund or a mid cap fund or a small cap fund, it is pretty healthy if you hold on for 10 years. The characteristic of the market is that, typically, and right now we are in a state of concern because the markets have corrected and the small cap indices have corrected. But that's the nature of the market, right? Typically, what you see is that the upswing are steady and the falls are sharper, right? So if you are going to invest over a period of time, right, bear the fall and let the market rise again in its natural course, then the probability of losing money in a systematic investment plan is very, very less, I would say. That's the nature of the plan, and that's the reason why the whole industry has been advocating SIP karo, mutual funds SIP karo, because statistics proves it.
Okay. One of the comments made, and I keep peppering with this, is maybe look at stopping your SIPs in small and mid cap. I mean, here is, I think, where the alarm bell really comes in. Feroz Aziz, I want you to come in on the ongoing debate, and of course I'll ask your view on what you're telling investors and what they think, but I'm getting that quote specifically. Investors should reassess if they wish to continue their SIPs in small and mid cap schemes. Right now, I think maybe what fear we are seeing in the market is that the bulwark of this market, the main support has come from investors who diligently, eyes shut, have been putting money in SIPs month after month after month, believing that this is the path. their faith is getting shaken now. Let me be very honest, that faith is getting shaken now. They need to be reassured or they need to be told what is going on. Feroz Aziz.
Yes, Tamanna, Naren Saab is of course a very, very respected name. And when he says it, we stand up and listen. But we have to also listen to some data, which is there. So I personally think there's no retail investors should always invest in 3-4 schemes, right? He's not going to buy a small cap fund only. I would say that if you have the third scheme as the small cap scheme, you have to not be worried at all. And if one in a decade, if a small cap fund does not make positive return, we have a larger problem to solve as a country. Because small cap is the word small cap itself. I debate the word small cap. The 250 companies, there are 2,307 NSE traded companies, out of which top 500 mein large, mid, small khatam ho jate. So the other 1,800 stocks don't even have a space in the mutual funds definition. Can you believe it? And we still call them small cap, and the small cap is a 50,000 crore market cap. When an investor is thinking small, he's not thinking of 50,000 crore market cap. When he's thinking mid cap, he's not thinking about a 1.5 lakh crore market cap. About six years back, the largest small cap was 8,300 crores. Today it is 45,000 crores. So the word still is small cap. How can you still
So I'll just add that the person who's investing is not even thinking about market cap. They're thinking about returns. Let's be very clear. This is stuff we talk about. They are going to their advisor and they're saying, "Paisa kahan lagao? Are small cap chal raha hai, usme lagao." Let's be very honest. What's going on?
Yes, Tamanna, sure. Let's see. Of course, people buy past performance. That's very evident. You ask any fund manager, he says that "Meri last 1 month ki performance achhi hai, then I'll get more money." That's for sure, Tamanna. You hit the nail on the head. India buys past performance. There's no two ways about it. The point I'm trying to get to is there is 93% chance. I'm speaking about rolling return on NSE small cap 250. There is 93% chance that it would be positive return on a 5-year rolling. Forget 10-year rolling. 10-year rolling is 99.3% positive return. Of course, now Naren sir is saying we are in that 0.7% possibility. Could just be, but I personally think investing is about higher probabilities, not lower probabilities. There is 89% chance for a 5-year rolling, and I'm speaking about monthly rolling for eternity, practically the full life of the index. 89% probability that you have beaten 5% per annum return. There is 81% chance that you made 10% per annum return and more. So the point I'm trying to get to is the odds are still stacked up in the favor of investor, even if he buys now. Second, I completely disagree to call them small caps as one group. MSCI index, India small cap index has 465 stocks. Indian mutual fund guys have only 250 stocks in the small cap index. So a foreigner sitting somewhere has 212 more stocks in the small cap index than the Indian guy. So why are we not expanding our universe of small cap? And how can we actually categorize 250 stocks in different industries, different segments, different sizes into one English word? So that's where I think the fund manager comes into picture. He's not buying 250 stocks.
Investors right now are wondering, should they reallocate to large cap funds? Should they reallocate out of small and mid cap funds? If they are mutual fund investors, direct equity investors are wondering whether they should reallocate their portfolios. What is your thought? Are you reallocating towards large cap?
That's our job in any case, and we have one flexi cap fund and one small cap fund. The point is that we are very much bottom up and we don't really do a top down call on whether to put money in large cap, mid cap or small cap. We just pick the best stocks available on the GARV framework that we have and terminal value investing framework that we have at that point in time. So if we find 50 stocks, out of which say 30% are in the small cap, we are fine with that. If we don't find 30% small caps, if it's only 15% small cap, we are fine with that too, right? So ours is a very bottom up driven approach. But coming back to your point on allocation, the fact that you are talking about investors means that they have already planned something out for their portfolio, assuming that they have either their own call in place or the advisor's call in place. And the point of asset allocation is exactly that, to ride out the volatility. You cannot let volatility dictate your asset allocation. Your asset allocation has to start from the ground up, from a zero-based budgeting, as you would call it, depending on your life cycle, life stage, your social ambitions, your personal ambitions, and the goals that you have, which you would have planned out before investing. If you are going to chase the latest fancy fad or the latest, asset class which is doing well, you cannot change it.
I will just differentiate. I get your point completely. Yeah. But in this case, why are we talking about this? This is not about the latest fad or asset class. I could say 2024 was thematic funds was the fad or the asset class. Or not the asset class, but
I'm saying why are we debating? Why are we debating?
Because you have a very seasoned guy.
I'm asking you, why are we even debating a change in asset allocation just because small caps have turned volatile? That's the nature of the beast. As Ashish said, it's not a bug, it's a feature.
Yeah, but have they turned volatile because it is nature of the beast, or is there some inherent concern which has caused someone whose opinion is very, very valued to come and say this? I would say that's the only distinction.
Absolutely. So, see, people are entitled to their views. There is no harm in giving your views because, you are professionals and that's how the market works, right? Somebody is positive, somebody is negative, right? The point is that stocks are cyclical in nature. Small caps even more so. That's why we always say that small caps are more volatile, and that's the nature of the beast. You can't help it. Let's face it, there has been some earnings cut in the last 3 or 4 months in the small cap indices. Markets have reacted. The earnings cut has been about 10%. Small cap index is down 70%, 17%. Point is, let's debate why those earnings cut happened. Let's debate those fundamentals. Why is the market down 17%? Why is the small cap index down 17%? And why have the earnings cut happened? If we dwell into it, then we can take a view on the future, whether this is recurring, whether this is likely to stay low, or is there a case for upgrade of earnings going forward? That's the debate we should be having, frankly speaking.
No, fair enough. Just one last point, Feroz, very quickly. Astute investors often say when the markets are hitting their bottoms is the time to come and buy. Is that time right now? Completely contrarian view. You have one view saying, lock, stock and barrel, get out. My question to you is, would you say it's time to come in right now? Even if you don't have 20 years to wait, let me put that caveat in place. Say 20, 30, 40 years, I don't think people have that kind of patience.
Yeah, I would say definitely buy and buy. Okay, it might sound like an equity guy being biased towards equity. I look at about 4 short-term barometers. All of them say that the markets are light. Markets can correct 10%. That's my disclaimer. I wouldn't be surprised if a small cap investor from here on, you can mark my words, in 5 years at least get a compounded return of 12 to 15%. And waiting for 10 years to come into positive zone is something I would not buy if I buy a smart fund manager in my portfolio, model portfolio, which is what all our investors invest in, thousands of crores. Invesco small cap is there. That's beaten Nifty by 6% for this financial year as of yesterday. So I personally think buy and buy.
Buy and buy. Okay. I'm glad we have this on record. We'll come back and we'll talk about it. We have this. Okay, Ashish, buy and buy.
Yeah, I mean, I would like, I already said it before you asked that I think that it's a time to start investing, start nibbling, and our trouble started with the US dollar and the Trump trade, right? What you're seeing now is just last couple of days, there is this, noise which has spread. I respect that, but I think that next 3 to 6 months, if you just stagger your entry, you will get some, good entry point. And I think I completely agree with what Feroz mentioned. And I'm not even a vested party because I don't run a small cap fund, but that's genuinely my view.
Last point. 3-word answer. Buy.
See, the small cap index earnings growth is 15 to 20%.
Yeah.
The large cap index growth is about 10%.
Yeah.
So you are seeing better earnings in small caps, and valuations have corrected. So it makes sense to buy.
Okay, so buy. Buy is the verdict from all 3 on our panel today. Of course, the caveat, you make your own decision, you speak to your own advisor, you do your own homework on this. But we wanted to break down this sort of alarming message which has gone out and put it into context for you. That's all the time we have on this episode of The Big Question. But thank you so much to all of you for joining us. Thank you to our viewers. And we'll see you back again, same time, same place tomorrow.
तो जो ट्रांजिशन
Hello and welcome to this Tuesday edition of the World Report. I'm Arjun Samar Mahindra and let's take a look at what's making headlines around the world. Shortly from now, Prime Minister Narendra Modi will co-chair an action summit on AI with French President Emmanuel Macron and hold bilateral talks to strengthen the strategic partnership between the two nations. PM Modi is in France for a two-day visit. Earlier, he was welcomed with a hug by French President Emmanuel Macron at a welcome dinner. Now, at this dinner, the Prime Minister also met US Vice President J.D. Vance, who was also in France to attend the AI summit. Meanwhile, NDTV's Gauri Dwivedi interviewed the AI envoy Martin Tisney ahead of PM Modi's crucial France visit. Take a look.
To talk more about the AI summit, to talk more about the role that India could play in this and why India could be central to a global AI revolution, let's now get in Martin Tisney, who's one of the envoys of the AI summit that is set to kickstart in Paris. Mr. Tisney, thanks so much for speaking to NDTV. One of the biggest things that the forum is really trying to do, the summit is really trying to do, is create a global framework for AI to ensure that no country has undue advantage over the others. Let me start by asking you, sir, how crucial do you think this global framework will be for the future of artificial intelligence?
Thank you very much for having me and for asking the question. So I think three things. First of all, it's the first time that we have such a diverse set of stakeholders in the room, and that's hugely exciting. So at the table, we not only have governments, we also have corporates in the private sector from around the world, and we also have civil society from around the world. So I think that it's this multi-stakeholder approach which is critical to the success of the summit. The second one is that the summit not only focuses on the potential harms from artificial intelligence, which was the focus of the first summit in the United Kingdom, it also focuses on the opportunities. So it's really looking at the two sides of the coin here. And I firmly believe that in order to unleash the potential of AI, we need to look at both. We need to look at how we unlock opportunities and at the same time, how we minimize harms. And the third piece is that the summit is based on concrete deliverables, actions. It's the AI Action Summit, and we will be announcing those on Tuesday after the closing session.
Indeed. Indeed. As far as the co-chair of the AI summit is concerned, India is set to play a very important role. How do you envisage India's role in terms of ensuring that this framework the AI framework is accessible to all and not just to the rich countries who've made early strides?
I think the role that India plays is critical. We very much welcome India's role in the summit and our deep working relationship. And obviously, India plays a key role in the ecosystem, and it's a pleasure to be working with them.
Okay. Okay, we'll come to the India role probably as the summit goes along. But then let me ask you, in terms of the trajectory of AI, where do you see it? Do you see it closer to the profit-led, private sector-enabled model that US is championing? Or do you see that the China model, which is state-controlled and government-led, really having a major role in terms of what will be the future of AI?
So I think the first thing is the future of AI is open. It's not private or public. I firmly believe that it's both. To do this, we need three things. We need to share data. I think that the bottleneck in artificial intelligence increasingly will become data as much as compute, if not more. And when it comes to sharing, accessing data, the state plays a very important role. So that's the first piece. The second one is, in this point of the future being open, I think the open source AI ecosystem is critical. That is an ecosystem that needs support in order to be resilient. And that is an area where both the public and the private spheres play critical roles. And the third one is the participation of citizens. I think that is really important. I'll give you a concrete example when it comes to AI in healthcare and sharing sensitive health data. We need to be working with patient data organizations, for example. And again, that's at the intersection of the public and the private sphere. So I think that it's a combination of both. In order to bend the arc of AI towards the public interest, we need the private sector and the public sector on board. I think in the same vein, as I was saying earlier, our focus here is both on unlocking opportunities and minimizing harms, and our focus is really deeply on working with the public and the private.
US President Donald Trump says all hell is going to break out if Hamas doesn't release hostages by Saturday at noon, warning the ceasefire deal with Israel will be cancelled. Now, this after Hamas announced earlier on Monday that it will suspend the release of 3 Israeli hostages planned for Saturday due to quote-unquote Israeli violations. A spokesman for the armed wing of Hamas says the group is postponing, in fact, the next scheduled release of Israeli hostages, blaming what he says are Israeli violations of the ceasefire deal, which is also in place. 3 hostages held in Gaza are due to be freed on Saturday in exchange for more Palestinian prisoners held in Israel. Meanwhile, Israel's Defense Minister Israel Katz called the Hamas announcement a complete violation of the ceasefire agreement.
Well, I would say this, and I'm going to let that because that's Israel's decision, but as far as I'm concerned, if all of the hostages aren't returned by Saturday at 12 o'clock, I think it's an appropriate time. I would say cancel it and all bets are off and let hell break out. I'd say they ought to be returned by 12 o'clock on Saturday, and if they're not returned, all of them, not in drips and drabs, not 2 and 1 and 3 and 4 and 2. Saturday at 12 o'clock, and after that, I would say all hell is going to break out.
Talking about his controversial Gaza takeover plan, US President Donald Trump has said that Palestinians will not have the right to return to Gaza, doubling down, in fact, on his plan. He said that the US is committed to buying Gaza. On the other hand, Arabian countries have rejected the plan. US President Donald Trump is removing the exceptions and exemptions, in fact, from his 2018 tariffs on steel, meaning that all steel imports will be taxed at a minimum of 25%. Trump has also hiked his 2018 aluminium tariffs to 25% from 10%. We are being pummeled by both friend and foe alike, Trump said. It's time for our great industries to come back to America. Now, the moves are part of an aggressive push by Trump to, in fact, reset global trade, with Trump saying the tax hikes on the people and companies buying foreign-made products will ultimately strengthen domestic manufacturing. Outside economic analysis suggest that the tariffs would in fact increase costs for the factories that use steel and aluminium, possibly leaving US manufacturers worse off.
So essentially, we're putting on a 25% tariff without exception on all aluminum and all steel. And it's going to mean a lot of businesses are going to be opening in the United States. Now, we're going to be meeting over the next 4-week period, maybe on a weekly basis, and maybe we'll do a couple of them at different times and maybe together. But we'll be talking about other subjects like cars. We'll be talking about drugs and pharmaceuticals. We'll be discussing chips.
Meanwhile, a third judge has in fact blocked US President Donald Trump's order ending birthright citizenship for kids of people in US illegally. Now, the order has garnered a lot of criticism ever since it was signed by Donald Trump. Over at Capitol Hill, the US Senate voted on Monday to advance the nomination of former Representative Tulsi Gabbard to be the Director of the National Intelligence. US President Donald Trump said he does not view Republican Vice President J.D. Vance as his successor for the Republican nomination in the 2028 presidential race. No, but he is very capable, Trump told Fox News anchor Brett Baier during an interview that aired ahead of Sunday's Super Bowl. I think you'll have a lot of very capable people. So far, I think he's doing a fantastic job. It's too early, we're just starting, said Trump. Listen in.
You view Vice President J.D. Vance as your successor, the Republican nominee in 2028?
No, but he's very capable. I mean, I don't think that it you know, I think you have a lot of very capable people. So far, I think he's doing a fantastic job. It's too early. We're just starting.
Donald Trump will meet Jordan's King Abdullah on Tuesday for what is likely to be a tense encounter following the U.S. president's Gaza redevelopment idea and his threat to cut aid to the U.S.-allied Arab country if it refuses, that is, to resettle Palestinians. Now, Trump's proposal floated 1 week ago for the U.S. to take over Gaza, move its hell-shocked residents and transform the war-ravaged territory into the Riviera of the Middle East, drew a negative response from the Arab world. Mob attack at book fair for displaying Taslima Nasreen's book in Bangladesh. A tense situation has arisen at the Bangla Academy's Amar-e-Kushe book fair for displaying Taslima Nasreen's books. A group of agitated people besieged a stall at the Amar-e-Kushe book fair this evening over the display of a book written by Taslima Nasreen, who's in exile in neighboring India. A group of U.S. Congress leaders have written to U.S. Attorney General Pam Bondi demanding an inquiry on the decision by the Biden administration to probe the Adani Group. The leaders have slammed the Biden DOJ probe into the group and called it a selective, reckless, and a baseless pursuit, which can potentially be damaging to the India-U.S. strategic ties. Now, the group of leaders, in a letter written to Pam Bondi, have said that there was no compelling reason for the probe to be initiated in the first place other than some external factors. Reminiscent of US President Donald Trump's tough immigration crackdown, the UK's Labour government has launched mass raids on illegal workers in the country. Described as a UK-wide blitz, the crackdown has extended to Indian restaurants, nail bars, convenience stores, and even car washes, which employ migrant workers. With British Home Secretary Yet Cooper personally overseeing the drive, the Home Office reported a record-breaking January as they descended on 828 premises, a 48% rise compared to the previous January, with arrests surging to 609 and marking a 73%, that's right, a 73% increase from the previous years. Listen in.
Rules really need to be respected and enforced for the asylum and immigration system to work. That's why since the election we have been increasing returns, so 19,000 people who have no right to be in the UK have now been returned, and also increasing the illegal working raids and going after the employers who are exploiting migrant workers. This is about making sure that there's proper fairness, proper enforcement in the system, and proper respect for the rules as well.
The prosecutor says Salman Rushdie was so stunned when a masked man started to stab him on a stage in Western New York that the acclaimed author, in fact, didn't even try to fight back. Rushdie is expected to testify during the trial of Hadi Matar, who's charged with attempted murder and assault in the August 2022 attack. During his opening statement on Monday, District Attorney Jason Schmidt described the swift and sudden attack by Matar, who stabbed Rushdie in the head, throat, abdomen, thigh, and hand areas. Now, the author was left blind in one eye. During Schmidt's statement, Matar looked on from the defense table, occasionally taking notes. His attorney, Lynn Schaffer, told jurors that prosecutors won't be able to prove Matar's guilt, even with videos and photos. She acknowledged that nearly all the jurors admitted during jury selection that they had heard something about the case.
Today, the jurors heard opening statements from both the prosecution and Mr. Matar's attorney. The prosecution started with a very graphic, detailed description of the attack on Mr. Rushdie. He described for jurors how an attacker kind of came out of nowhere from the audience, bounded onto the stage, attacked Mr. Rushdie at a full run and began stabbing him before anyone even really knew what was happening.
According to a lawsuit filed on Monday, a woman in the U.S. has accused internet personalities Tristan and Andrew Trait of conspiring to coerce her into sex work, luring her to Romania and defaming her after her testimony to Romanian authorities. The civil complaint in Florida was reported earlier by the NYT, which said it marked the first suit against the brothers to be filed in the United States. Canada's Toronto Dominion Bank has said it would offload its 10.1% stake, in fact, in U.S. financial services firm Charles Schwab.
as part of a strategic review undertaken following a landmark US fine. Now, TD holds 184.7 million shares in Charles Schwab, worth roughly $15.4 billion based on Friday's last close. The company said in separate statements early Tuesday that TD's unit will sell 165.4 million shares of Schwab at $79.25 apiece for about $13.1 billion. Meanwhile, BP's fourth quarter profit fell to $1.17 billion on Tuesday, marking the lowest earnings for the oil major in 4 years. Now, this as weak margins dented its refining business. The 61% drop in quarterly profit from last year, coming just days after reports of activist investor Elliott Investment Management building a stake in the company, has heightened investor hopes for broad changes and strategic shifts, in fact, to boost returns, putting additional pressure on CEO Murray. According to reports, OpenAI CEO Sam Altman has told staff in a meeting that the company's board of directors intends to make clear it has no interest in Elon Musk's supposed bid. A consortium of investors led by Elon Musk offered $97.4 billion to take over OpenAI, the maker of ChatGPT. Now, in response to the bid, Altman posted on Musk's social media platform X, "No thank you, but we will buy Twitter for $9.74 billion if you want." Now, the billionaire's attorney, Mark Toberoff, has confirmed he submitted the bid for AI assets, for all assets, in fact, of the tech company to its board on Monday. The offer is the latest twist in a long-standing battle, in fact, between Musk, the world's richest man, and the right hand to US President Donald Trump, and OpenAI chief executive Sam Altman over the future of the startup at the center of the AI boom. According to reports, Chinese battery giant CATL plans to file a Hong Kong listing application this week to raise at least $5 billion. Now, the filing could come on Tuesday or Wednesday, added the sources, who could not be identified, discussing confidential information, in fact. A listing of the Shenzhen-listed firm, the largest battery maker in the world, in fact, would be one of the biggest listings in Hong Kong in the past 3 years. In the sports first, ace Indian pacer Jasprit Bumrah's availability for the upcoming Champions Trophy 2025 is likely to be decided on Tuesday, which also happens to be the deadline for the submission of the final squads to the ICC. Bumrah, India's best performer in the 2024-25 Border Gavaskar Trophy, has been sidelined due to an injury since the final test of the series. The star fast bowler had to pull out mid-match, in fact, after he felt pain in his back while bowling in Sydney in the first week of January. Since then, he has not played any cricket match. Golfing legend Tiger Woods abruptly withdrew from the Genesis Invitational at Torrey Pines, saying he was still processing the death of his mother. Calcutta Woods died unexpectedly last Tuesday at the age of 80. "I plan to tee it up this week, but I am not ready," Woods posted on social media. "I did my best to prepare, knowing it's what my mom would have wanted, but I'm still processing her loss." Now, Woods, the tournament host of the Genesis Invitational, however, said he hoped to be back at the Torrey Pines later in the week, adding that he appreciates the continued kindness since his mom's passing. World champion D. Gukesh Dommaraju bowed out of freestyle Grand Slam chess after losing his second straight quarterfinal game against Fabiano Caruana of the United States on Monday. Having lost the first game with white pieces, Gukesh did not last long against the American Grandmaster in a must-win tie, in fact, with Caruana finishing the contest in a mere 18 moves. Gukesh will now fight for the last 4 spots. The freestyle chess is built around 960 random positions, shifting the initial position of the pieces from the base rank while the pawns remain intact. A tour manager for rapper A$AP Rocky testified that the hip-hop star began carrying a prop gun that only shoots blanks after a stalker and others had broken into his house. Lou Levine said Monday that Rocky gave him the gun after firing it in a confrontation with a former friend in 2021. The rapper is charged with 2 felony counts of assault with a semi-automatic firearm over the incident. The defense insists he is not guilty because the gun did not, in fact, even fire real shots. Philadelphia quarterback Jalen Hurts visited Disney World on Monday, a day following the Eagles' victory in the Super Bowl. Hurts were named MVP after going 17 for 22 for 221 yards and 2 touchdowns, and in fact also running for 72 yards and a touchdown in a 40-22 win over Patrick Mahomes and the Chiefs that avenged a Super Bowl loss 2 years ago against Kansas City. Listen in.
E-A-G-L-E-S, Eagles! It's a hell of a crowd out here. I just want to say thank y'all for the support. Thank you for the support. Being here is such a blessing. You dream about coming here as a kid and to be in paradise. To be in paradise with you great fans, all the great support. Eagles everywhere, across the world. Thank you for the support, and we brought it home to Philly. One more time. E-A-G-L-E-S, Eagles! Go Birds. I forgot the song. Head up high. Fly, Eagles, fly, on the road to victory. It's been a minute since I sung that, Mickey. You know that? Yeah. Been a little minute. Last time I sung it too soon.
On Monday's Tory Burch fashion show in New York drew stars from across the globe. American actor Amanda Seyfried and American recording artist Kiara were there. Sinji Lee, a Malaysian actor, also attended. Lu Yijiao of China also sat in the front row. Meanwhile, Indian-Australian actor Shibani Dandekar was also invited. The event also drew French model Mara Lafontaine and Danish influencer Emil Sindler. Now, Birch's runway presentation showcased a 2025 ready-to-wear collection. Well, that's all we have for you today. Take care and have a wonderful day.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead.
Hello and welcome. Good evening. This is Ask Profit only on NDTV Profit, and I'm your host Malika Mishra.
And I'm Himakshi Bahugna, and together we'll be taking up all your stock-related queries. So you can WhatsApp us or call us directly. Both the numbers are flashing on your screens right now, viewers. And on the show, we are joined by Mahesh M. Ojha of Sensex Securities on the fundamentals, and Kushal Gandhi, technical analyst, Stocksbox on the technicals. Welcome to the show, gentlemen.
Good evening.
Good evening. Now, let's get straight to the query. First query we have from Dinesh. He has written to us from Rameswaram. He writes to us saying that he's been tracking Sun Pharma Advanced Research stock because of the parent company, has a very strong hold in the pharma sector. So will you bet on the stock at the current level, considering it might outperform in the future if they made significant breakthrough in research? So, and he's also mentioned a specific note saying that he's bullish on Dr. Reddy and Natco Pharma. So currently the stock is trading at 149 levels, and it was down significantly over 4%. Today the stocks have seen a lot of beating. So coming straight to you, Mahesh, on the fundamentals, how is this particular company looking like?
No, I think Sun Pharma stock is good, but I think all the mid-cap stocks are facing some more pressure due to uncertainty in market. So I think some more downside can't be denied. From here also we can see some more downside till 135 to 140 range. So stock is from 1 year horizon, stock is good. I think stock has a potential to go upside up to 25 to 30% in 1 year horizon and more than that. But currently market facing some selling pressure, so this stock can face more selling pressure in from here also. 135 to 140 level could become, but from 1 year horizon, definitely hold.
Okay, got it. And now we have another WhatsApp query written to us from Hari Om from Haryana. Now, Hari Om holds 252 shares of Vedanta at 462 apiece, and he's asking whether he should hold on to these many shares of Vedanta or sell them. Now, although he is sitting on a profit of close to 78,000 rupees, the entire metal basket of the Nifty has seen a lot of beating recently because of Trump tariffs. Trump announcing 25% tariffs on steel and aluminium imports. Now, while we don't know what kind of an impact Indian exports could see because of this Trump's decision, a lot of stocks have started reacting to this in the metal space. As a result, even Vedanta and other counters in the metal space were down. So I would like to ask this question to you, Mahesh. What do you think about the company, this investment, and when do you think Hari could make a lot more profits than he is sitting on?
Actually, stock is good, but currently global uncertainties are there and many more things which are giving some more downside pressure on the stocks. I think he should book at least 50% here and wait for the wait for the upside level. If his horizon is more than 1 year, then we can see 500 plus odd level in Vedanta. But currently, all the market are facing some selling pressure. Global uncertainties are there. So partial profit booking advisable here.
All right, so that's the view coming in. With that, we have our first caller on the show. Ravi is calling us from Bengaluru. Hi, Ravi. Good evening. How can we help you?
Yeah, good evening. Good evening.
Yes, please go ahead with your
query.
query.
I hold 100 shares of Yatharth Hospitals.
Okay.
At the rate of 562.
Right. 562.
Is it right time to... Yeah.
Okay.
Is it the right time to add another 200 shares?
Another 100 shares?
Yeah, 200 shares I want to add.
Okay. And are you looking for a short-term perspective or a long-term?
No, I am looking for 1 year.
1 year outlook. Okay. So, Mahesh, coming straight to you on this, is it advisable for Ravi to, add more 200 stocks in Yatharth Hospital and Trauma Care Services?
I think in Yatharth, he can add. Currently, stock is facing some pressure due to some their income tax and other issues. So, but fundamentally, stock is good. I think hospitality sector can do very well in upcoming If you want to add, I think they can add in these level, and for the 380 to 400 range could be a good level for accumulation in Yatharth Hospital. So from 1 year perspective, he can add further in Yatharth. 600 plus level can come in 1 year horizon definitely. So we are optimistic for upside in Yatharth. So I think they can add Yatharth in these levels.
Understood. And viewers, don't miss your chance to get all your stock-related queries answered. So pick up your phones and call us right away. Let's slip into our next WhatsApp query. Suma has written to us, I don't know the location, but she holds 125 shares of REC at 561. Now, the price is currently trading around, the stock is currently trading around 410. She's asking if she should average it, exit or hold. Kushal, let's take this question to you. What is your take on REC?
Well, my sense is to, just let go of the stock because the stock remains in, significant distribution mode. It's constantly losing its relative strength as compared to general market. And, despite distribution, the volatility remains significantly high, the relative 50-day volatility. So it's best to, book your losses, just in case you're holding in losses. Because the shorter term moving averages are likely to act as constant supply zone. So it's best to sell at the current market price, considering the current market environment.
All right. And Mahesh, I'd like to take your view also on the same. What do you have to say for the longer term?
I think they can, if anyone want to add in the REC, then they can add in the some 375 to 400 range. Then that range could be a good for accumulation range. REC has much more potential for upside, but currently all the market are facing some selling pressure. So some more downside can't be denied in this also. But 375 to 400 range will be good for accumulation.
Right, so that's a view coming in on REC. Now we have a caller from Delhi. Hi, Mr. Malhotra.
Yes, please.
Good evening. Thanks for speaking to NDTV Profit. How can we help you?
I have purchased 250 shares. 250 shares at a rate of 250.
Okay.
Piram and Pharma for 1 or 2 years.
All right. So are you looking for a long-term view on the counter?
Yes, more than one year.
Okay, because I can see that you are sitting on a loss of almost 12,000 there, over 11,000. So, Mahesh,